This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney. I got to remember how to do this. Michael Barr.
No, everybody.
Lisa Mateo. John Tucker in for Lisa Mateo.
Well,
thrilled that you're here. Paul back from sabbatical. I got to avoid the Duke UNC chat. Yesterday,
yeah.
A start of a fourth quarter. Sell in May and go away. How'd that work out?
not good. I mean, you're just making money, it seems like, all year long. We've got a Fed that's easing, Tom. We've got a pretty steady earnings backdrop. Yeah. That seems pretty constructive for a lot of risk assets to me.
In September, you shouldn't invest. September's a
bad month.
Scary month.
We got through it, though. We got through it okay.
Now October.
Yeah,
What's the
exactly.
excuse?
Oh, boy.
Extraordinary numbers, folks. It'll be a good theme for us. We've got some wonderful guests today on the equity market. Brent Shooting on asset allocation in the 9 o'clock hour. Stuart Kaiser, hugely popular, will join us here. We say good morning to all of you. On your commute, Android Auto, Apple CarPlay, Sirius XM, good morning. I got chastised. I don't mention Sirius enough.
Well, you got to.
Satellite,
right there.
it's still a
Awesome.
big deal. And good morning on the quarter, 99.1 FM in Washington, Bloomberg 11.3, our flagship in New York, and 92.9 FM in Boston. We're going to do trade here in a moment. We have a strike on the East Coast all the way around to Texas, major depots being Newark. I didn't realize how big Newark is.
Huge. I mean, the port of New York and New Jersey, just massive there. Yeah. And it's, think about Savannah down in Georgia.
Savannah, Georgia.
And then I forgot, it's the Gulf Coast ports as well.
Yeah.
So all the energy impact down there in the Gulf Coast.
We'll touch on that. Denny Berger's out right now
in
Newark. We'll talk to her there on this morning. Let's get right to it. From the Interactive Broker Studios, our Bloomberg Business Flash, John Tucker.
And stocks beginning the fourth quarter, it's Ahmed Paul on a winning streak. S&P 500 has gained for 4 consecutive quarters, longest such winning streak since 2021. S&P 500 added $2.5 trillion in the third quarter. It closed at a record yesterday. Dow Jones Industrial Average also closing at a record. Boeing among the most active pre-market, down about 1.5%. And the debt selling goes on. More than 1,200 debt issuers selling over $600 billion in September. That's according to data compiled by Bloomberg. The most for that month in records going back more than 2 decades. Just piling it on. S&P futures 4 points higher. The Dow futures right now down to 82. The NASDAQ futures are up 59 points. A 2-year yield 2 basis points lower. That's at 361 right now. And the 10-year yield is 4 basis points lower. That is at 374. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul, Tom.
John Tucker, thanks so much. In 1959, there was a steel strike. It lasted 100-plus days. Dwight David Eisenhower had to get involved. He invoked the back-to-work provisions of Taft-Hartley Act. Maybe it reaches back to the last time we had a dock strike here on the East Coast, as Paul mentioned, all the way around to the Gulf Coast. Expert on this is Brendan Murray with Bloomberg News in New York, but far more driving our government coverage in Washington for years. Brendan, can the president, can the government intervene in this strike?
Well, he can. He has the authority to do so. But the question is, will he, given that we're 5 weeks away from the election now, and his party desperately needs union support. So breaking up a union strike right now is not politically advisable for either party, and so the likelihood that the sitting president, President Biden, will do so is slim for now. But the more the economic pain widens, that calculus might change.
Hey, Brendan, as we become more educated about this strike and the impact, all of us are seeing these maps where we see the ports all the way from, Maine all the way down around into the Gulf. This is serious here. Is there any sense as to how far apart the two sides are and how long this may last?
They're pretty far apart rhetorically, but when it comes down to the numbers, it doesn't seem that they're that far apart. The employers are saying for the next 6-year contract, we'll give you a 50% raise. That's a kind of annualized a 50% increase over 6 years. So I'm sorry, yeah, a 50%, and the union wants 77%. So there is a way to find a middle ground. It just depends on how firmly the union digs in its heels around that 77%.
Brendan, the emotion of this, whether it's nurses or it's dock workers or it's Boeing and all that, is it basically we sacrificed as labor during COVID and we need to catch up? Is that what this is really all about?
That's absolutely one of the storylines here, Tom. This is, these are men and women who went to work every day, while a lot of us were, working from home, padding out our home office or outfitting
Brendan
our backyards.
Murray did that? No.
And they all went to work. This is not easy work. It's lashing enormous ships in the weather, and we all sat in the comfort of our own homes, and and they kept the economy going. So that's their argument: is, hey, it's time to pay up.
And Brendan, we had a West Coast strike, a year or two ago, and they came to some solution. Is there anything we can base off of the West Coast contract for the East Coast folks, or is it different economics?
Well, the East Coast, the ILA is looking for a bigger pay increase than the ILWU did on the West Coast, and so the stakes are higher, but the timing is in their favor. That they've got all the leverage right now. They're holding, the economy hostage a month before the presidential election. So we'll see how long the other side can hold out.
Brendan, thank you so much. Brendan Murray from Queen Victoria Street in London, driving our trade coverage at Worldwide. We'll have much more on this. Danny Berger at Elizabeth, New Jersey, and we'll go to her here in the next hour. This is a joy right now. Red and green on the screen. And I noticed the 10-year yield comes in, the real yield rather comes in. Right. Perfect time to speak to Michael Cushman. Yeah, it's on my Bloomberg Launchpad, just like Michael Cushman at Morgan Stanley. He brings sterling economics to his work at Morgan Stanley. Joins us about a great synthesis right now. What is the new lower 10-year real yield signal?
I think it signals that the economy is generating lower inflation. We should expect lower nominal yields if inflation keeps falling further. The question is, will inflation fall further, and where trend growth is in the economy, where the bottom of the inflation cycle is.
This is exactly what you do. Let's dovetail economics together with your fixed income world at Morgan Stanley. Where's trend growth? Are we sub 2% GDP? Do we completely underestimate that John Williams is right and our start's going to get back to 2.0?
It's a very good question. It seems to me things have changed.
I got to
get
ready for Tiger. Michael, stop. I got to get ready for Tigers baseball. I had one good question. Cy, can I go? No, he's saying no. Continue.
It seems to me that the whole structure of the U.S. economy and global economy have changed post-pandemic with all the fiscal easing which is going on, and now we have monetary authorities worldwide, cutting rates almost in a food fest of who can cut rates faster and sooner than the next guy. To this morning, ECB speculation about the ECB after inflation data in Europe, but importantly, it seems like the floor on interest rates seems to be, in the market sense, around 3% Fed funds rate, which is well over zero we had in the previous 10 years. And if 3 is the floor or the neutral rate, then it seems like growth is going to be higher. Real yields will be higher. The question is how much higher, 1% or 2%? The good old 1990s, it was a 2% real Fed funds rate, and you had almost a 2% real 10-year treasury yield. Are we going back to that period? If we have growth like we had the mid-1990s, we probably will.
All right, we've got the Fed reducing rates. We've got other banks around the world doing that, with maybe the exception of the Bank of Japan. What's a fixed income investor to do? What are you telling your fund managers at Morgan Stanley Investment Management?
Again, if inflation is really quiescent, falling back towards the 2% level, I think as you get closer and closer to 2, it gets harder and harder to get to 2, barring any kind of material economic downturn. And that just suggests that interest rates are fine at current levels. A 3.75 10-year, if inflation is truly going to 2, the long-term expectations, 1.75% real rate is okay for a risk-free return, especially versus the last 10 years pre-pandemic.
Michael, I want you to talk to the core. Yeah, get the mic close to him. It's his first time on radio. He was by the King's Speech, years ago, I mean, that far back. Michael Kushner, with all of your decades of experience, I want you to speak to our listeners and viewers. They're scared stiff to be in the stock market. They want to grab a coupon. Are they clipping a coupon, or are they looking for total return?
I think it's these days right now it's clipping a coupon. So the corporate bonds, yields 4.5% to 5.5%, depending upon the bond you're looking at. It's a perfectly fine, real yield after inflation. It looks solid. You can probably count on it over time. Down the road, the U.S. has, as many other countries, have huge fiscal imbalances, which probably have to be dealt with, which will probably be deflationary at the time when that happens at some point down the road, which should support fixed income. In the short term, you have central banks, slashing interest rates everywhere. Everyone's trying to stay ahead of the curve. At some point, it will come to an end, but it's also possible that rates will keep going lower if things continue to weaken on the labor market front in the U.S. So the bond yields are solid coupon income generating things around, but don't expect a lot of capital gains from current levels.
Michael, John Tucker was just reporting that September is going to be a record month for new issuance in the bond market. I'm a salesperson at Goldman Sachs or JP Morgan. Are you my top call when I've got a new issuance? Do you guys buy this new stuff?
We're very careful about what we buy. Spreads and levels for many corporate issuers are on the very tight side. They're in the bottom quartile, if not tighter historically. Yield levels are the top quartile. This is the divergence in bonds. So the spreads are low, but they should be low. Economic growth is really solid. Corporate profits are really solid. Nominal GDP is really solid. Why shouldn't spreads be tight? But yields are still on the high side relative to the last 10, 15 years, which suggests that bonds are fine. You don't expect a lot of capital gains when spreads are tight, but you should generate that income should be fine for the next couple of years.
So you're picking up the phone when I call?
We'll evaluate.
Okay.
we'll evaluate it, yes.
Michael Kushner, thank you so much with Morgan Stanley. Thank you for joining us in our studio today. Greatly appreciate that. Red and green industry, and the VIX extends out. We were, 15, maybe a printed 14 for a cup at Sanka. We go 15 out to 16.64. Futures red and green. With our news in New York City. Oh, there's no news. Excuse me here.
We're just going to do,
Thank you, Rich. Sorry.
He's saving us here.
He saved us. I'm not focused because of Tigers ball.
Tigers are in the playoffs. The Lions won last night. They're 3-1. I mean, the folks in Detroit are going crazy today.
They are. Good morning to Detroit. I mean, I thought Barr wouldn't come in today, but he's a trooper. He's coming in.
The Mets are in.
The Mets are in, and I watched it the first game when they all went mental.
That was a unbelievable game. Arguably one of the best regular season games in Mets history.
I'm scarred. I can't physically watch the Mets because of 1986. It's like I'm
with the
scarred.
Red Sox. Okay, all right.
It's just like I'm mentally damaged.
That happens
from it. But I'm watching Tigers Stros today. It'll be good to see and
turn it around. Yep.
We'll turn it around in that. What else do we got? We got Bitcoin 62,000 extending out.
Absolutely.
It's like poised.
Matt Miller. We're pushing on 64,000 there on the BitDog, and Matt Miller's he's long Bitcoin. The problem is he doesn't have the number of his tokens, so he can't actually liquid.
It's like a year's tuition, isn't it?
Yeah, exactly.
It's like some serious. Remember your token, your password to your token.
That's important, kids.
Pro tip here this morning. We are with you on YouTube. Subscribe out at YouTube. What a September. Thank you. On this October 1st, subscribe to YouTube. It's our new huge global distribution, of course, on your commute. Android Auto, Apple CarPlay. Good morning on the corridor of the Northeast. From New York City, this is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks beginning the fourth quarter on a winning streak. S&P 500 has gained for 4 consecutive quarters. Both the S&P 500 and the Dow Jones Industrial Average ended yesterday's session records. Boeing among most active pre-market, down about 1.5%, considering raising at least $10 billion by selling new stock. Of course, they're trying to replenish their cash reserves because of the ongoing strike. Michael Dell unloading more Dell stock, selling 10 million shares of his namesake company stock, worth almost $1.25 billion, marks his second significant sale in September. That stock, that has jumped 55% this year. I'll go overseas right now. Yields on the 10-year German bonds falling as much as 7 basis points. Lowest level since January after euro area inflation slowed below the ECB's 2% target for the first time since 2021. Right now, the Dow futures 79 points lower. That's down 0.2%. S&P futures up 2 points, and the NASDAQ futures right now up 43. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Tom.
John Tucker, thank you so much. On this equity market, on a year-to-date, spectacular performance, a one-year trailing performance, 5-year pre-pandemic, post-pandemic, however you want to look at it, you have to participate. And Charles Schwab has led the way there. Liz Ann Saunders and Kevin Gordon leading the way. You've got to play to win. Kevin Gordon, Senior Investment Strategist, Charles Schwab. Now what? As simple as I can make it, after the spectacularness we've seen, now what?
I think the now what is, to your point, Tom, stay invested. And I think that's been a really important part of the bull market, which is about to turn 2 years old. For the S&P, it started on October 12th of 2022. So next week, we're going to be celebrating the 2-year mark. Performance since then has been, pretty great across the sector spectrum. The only sector that I would say has gotten, probably had mediocre returns has been energy. It's been, dead last. It's up 9% since the beginning of the bull. But over the past several years, over the past 4 years, it's still the best performer. So it kind of shows you the sort of the distortion sometimes in looking at a time frame.
Do you buy growthiness here, or do you tilt value, trying to avoid a value trap?
I think where we are in this unique cycle, where you've got still cyclical parts of the economy that are still struggling to enter their own recoveries, things that got hit already, manufacturing, housing, consumer goods, anything housing related. As those, I would think, maybe benefit sometime next year from now the Fed starting to cut rates and ease policy a little bit. To me, that would be a little bit more additive to the so-called value or value-oriented trade. Not to say that growth has to take this massive step back, but some of that fabric in the leadership has already been changing. So since mid-July, the so-called growthy parts of the market have been really taking a step back. That's probably most evident in the tech trade and tech leadership, sort of the tech sector ceding leadership to the rest of the market. I would think that probably continues in somewhat of a choppy fashion, but we've sort of argued for maybe both sides of growth and value, or investing in both of those areas, but keeping a focus on quality and not really sacrificing that, especially because you're in an environment where growth is still slowing, not going into recession, we think, anytime soon, but with that growth profile slowing and also rates staying relatively elevated, you want to stay up in quality.
So, Kevin, the Fed is cutting rates. That's a good thing for risk investors, including stock investors. How about earnings? What's the earnings outlook from your perspective, and how important is that to take this market higher?
Yeah, revisions actually have been cut rather aggressively coming into this reporting season for this current quarter. I wouldn't pay as much attention to just the quarter itself, as opposed to now what companies are going to say because of this cutting cycle that we've now gone into, and what that particularly means down the cap spectrum. Matters a lot more for small businesses as opposed to large businesses. We know that in this cycle, large businesses have been, in aggregate, relatively immune to how much rates have gone up. It's not the case for every single company, but a lot of the pain and the stress has been felt at the lower end, or at the smaller end. So I think that, to me, is more important, especially because you still have this huge divergence this huge gap between forward earnings for large caps and forward earnings for small caps. Whether you're looking at the S&P 600 or the Russell 2000, you still have forward earnings that have kind of rolled over and not really gotten anywhere close to their prior peak a couple of years ago. That, to me, really needs to get up and going because the small cap trade has sort of been this most frustrating part, I think, of the bull market, where it's just really lagged. And you never see that in a sort of bull market that starts either coming out of a recession or not. I think that is an important aspect for earnings.
Paul, let's recalibrate. I'm going to go back to 2018. I'm going to round it to the whole number. The Dow, 23,000. Just before the pandemic, 29,000. The next year, with all that trauma, 31,000. The next year, with all that trauma, 36,000. Then we fell out of bed. Everybody went to cash. I was already there. 33,000. And right now, year end 23, 38,000. And we're at 42,000 this morning. I mean, I don't know how you time the market. I don't get it.
The courage to be in the market, Tom. Got to be in there. So, Kevin, I mean, when you talk to, you guys go out on the road a lot. You talk to Charles Schwab account holders, clients. What do you tell them today? What's kind of the generic investment advice you give to a room full of Charles Schwab account holders?
Yeah, and Lizanna's on the road right now. I've been on the road the past 4 weeks all over, and it's been great.
On the road is the Hamptons. Okay.
No, West Coast. It's early morning for her. But the biggest thing, well, number one, just having as we're all talking about, the courage to stay in the market, especially because you've got so many things going on this year, whether it's Fed related and sort of nervousness around cuts. And in particular, I was at a client event right before the Fed meeting a couple of weeks ago, and there was all this consternation around, well, are they going to cut by 50, and does that mean something sinister for the economy and the market? Not necessarily, and we've learned that over the past couple of weeks. The market's been relatively fine. It's only been a couple of weeks, but beyond that, the dominant focus is obviously the election. But I think from our standpoint, and we just published on this yesterday, the staying invested principle and theme throughout election years has proven to be the best strategy. Nobody can time anything market related. You certainly can't time anything around elections. I sort of bristle when I see strategists or analysts suggest that you can. Even at a sector level, it does not work. You cannot tie policy proposals to sector performance. We know that in the past 2 administrations. So that has been our main message: is don't try to time anything around political events, and don't try to time anything from a sector standpoint.
I mean, just as one example, they ebb and they flow. Apple out near record highs yesterday. A Mag 7 update. If I don't own Mag 7, do I acquire shares this morning?
No, I think that there's often this conflating with the Mag 7 being the best performers, which is just, hasn't been true last year, hasn't been true this year. It doesn't mean that they're bad in terms of performance, but I think that given the concentration issue that has plagued this market for so many years now, it's understandable that, yes, if you have the top 10 largest companies in the S&P making up almost 40% of the index in terms of market cap, that sort of, I can see how that gets conflated with them being the best performers. But the reality is there's only one Mag 7 stock that is in the top 10 performers in the S&P this year, and it's NVIDIA. It's no longer the top performer. It's now number 2, which is still great. But there has been so much more opportunity that has come out of this churn that has happened throughout the year, where you've got significant drawdown activity at the individual member level within the S&P, within the NASDAQ, within the Russell. So we think that given the strong performance within the Mag 7 itself over the past couple of years, it's sort of bred opportunities for trimming some gains and then adding to other parts of the market that haven't performed well. I think that still proves to be a pretty good strategy.
30 seconds, financials.
We have it rated strongly. We have it rated as an outperform. It's the top of our sector model. The breadth looks, quite strong, and it's not just one industry leading things at certain times. You've really seen a nice expansion in the percentage of companies that are trading above their 200-day moving average, the percentage of companies making new highs on an equal weighted basis. The sector looks really strong.
Kevin, thank you. Kevin Gordon with us at Charles Schwab with a nice update to get us going here on an equity morning on October 1, Q4. We say good morning to all of you. Really, really interesting dash to John Tucker. When do we start shutting down? Is it November 15th you peel back to a 25-hour work week?
No, I actually have already started doing that. I'm down to 50.
Okay, you're down to 50.
a day.
Slacker.
We'll see. Well, we're going to dash to November 15th, and maybe from there. My basic take after we've been wrong on May, wrong on September, to say slide away in December is probably the wrong idea. A little bit of red and green on the screen, a churn to the market. From New York City, Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Both the S&P 500 and the Dow Jones Industrial Average starting off the new quarter after closing at records in yesterday's trading. CVS Health, that's among the most active. Those shares up about 1.9%. CVS Health is conducting a strategic review of options, including a possible breakup. This as the company faces headwinds from its drugstore chain and Aetna Health Insurance arm. So the big questions surrounding the dockworkers strike: how long? J.P. Morgan Chase estimates the economic loss from the shutdown will be up to $4.5 billion a day. And according to Oxford Economics, a backup resulting from just a week-long strike that would take about a month to clear out. And then word from BI's Mike McGlone. He's writing this morning, crude's track likely toward $40 a barrel. And gold, $3,000 an ounce, with bumps in the road expected. Dow futures right now down 88. S&P futures down just a point, and the NASDAQ futures up 25. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul, Tom.
John Tucker, thank you so much. This is an honor. If you grow up in Arkansas, which is far west of this horrific Helene damage that we've seen, you are wedded to the Mississippi River. And if you grow up in Arkansas as a kid and your parents sort of kind of like remember it, but it is seared into the memory of your grandparents, is the great Mississippi flood of 1927, which is where America decided what it would do in disasters. French Hill of Arkansas joins us this morning. French Hill, we've got to come to the rescue of these people. Are Democrats and Republicans united?
Well, good morning, Tom. And yes, 1927 was the ultimate devastation in the Mississippi Valley. A great book, Lanterns on the Levee, the culture there. Yes, absolutely. And let me point out that Speaker Mike Johnson, in our first version of the continuing resolution that included our SAVE Act, which limited voting to just American citizens in federal elections, we also had a replenishment of the FEMA fund in that bill. Unfortunately, some of my colleagues did not go along with that continuing resolution. So when we get back, I think we'll be confronted with a supplemental appropriation to replenish those FEMA stocks.
Okay, but French, let me cut to the chase. Speaker Trump reneged on North Carolina X number of times ago. I don't know. Paul Sweeney had to shovel out his cottage during Hurricane Sandy. Across 50 states, we don't know where the next disaster is. How do Republicans grow up and do a unified effort for these people devastated?
I think we will. I'm sure we will have a supplemental appropriation, as I say, to support FEMA, and we'll deal with that as soon as the Congress is back in early November. And I think we should, and that's why I voted for it back in September.
So, French, when Congress does get back in early November, give us kind of, from your perspective, what the to-do list is for our Congress.
Yeah, it's extensive. First, we've got to finish fiscal 25 spending. The House passed about 75% of federal spending across our House floor. The Senate has passed no bills across the Senate floor. That's the top issue when we get back, is settling on spending. We have a CR that runs until the third week in December. Secondly, we have the National Defense Authorization Bill, which has been in conference between the Senate and House. That bill will certainly come to the floor. And then, as Tom noted, the crisis in the Southeast from the hurricane. But there's another crisis brewing in farm country, which is the fact that we don't have a renewal of the agriculture programs. We reauthorize those every 5 years. They're expiring at the end of the year. There's some severe shortages in some of the commodity programs. I think that'll be a priority when we get back as well.
And I guess kind of the most immediate thing here right now, Congressman, is the strike. We're day one of the strike here on the East Coast, and I'm just kind of looking at some maps up on the various TV networks, and it's just, the entire East Coast wrapping around Florida, well into the Gulf Coast here. These ports are shut down, impacting, roughly half of the trade coming in and out of this country. What's the view in Washington, D.C. as how this should play out or could play out?
Well, you heard the cost estimates from J.P. Morgan Chase. You're talking about 45,000 people, 36 ports, the entire Gulf and East Coast network of longshoremen. It's my understanding the president has 80 days that he could ask for a cooling off period and intervene in this strike, which comes at a precipitous time, both in the economy, which is soft. We're in a situation where we have unprecedented amounts of imports coming into the country for the Christmas holiday season. So I think it's got a dramatic impact on the economy, particularly in the Southeast when you're already battered by the hurricane. So I don't know if the president's going to take that action or not.
French Hill, how does the senator from Ohio recalibrate from the last number of months of a campaign, and I don't know what the polling is. I'm going to assume it's a dead heat. It's not for me to say what the polling is. But how does a senator from Ohio this evening recalibrate back to the grand old party of Hill and Lincoln?
So Senator Vance tonight should remind voters that Harris-Walz is the continuation of the Biden administration, and the three big issues in this campaign: inflation and the impact on our families, the open border and the impact on fentanyl, crime in our communities, and potential terror attacks. Those two issues are critical. And I just believe that Senator Vance ought to go back to the issue that Harris and Biden had 4 years to deal with that. And it was decisions that they took as president and vice president that have made those situations worse. And I think that's where he ought to stick to the facts, stick to the fact that the Trump-Vance policies could be better than the Harris-Walz policies on border security, national security, the economy, and particularly pushing back on inflation.
Look for the coverage tonight on Bloomberg Radio at 8 p.m. Paul?
Balance of power, exactly, Tom. Congressman Hill, what do you think? I mean, we get back into session here in November. Most of the experts that we hear from, they expect, this is going to be a deadlock government going forward. I mean, it's a relatively small chance that either the Republicans will sweep the three branches or the Democrats will sweep the three branches. So most of the odds suggest it's going to be a deadlocked type of government. What can we expect from that type of government over the next several years, do you think? What's your perspective?
Well, Paul, let's use your hypothetical of tight margins in the Senate and House, and then we don't know the outcome in November. Either president, Harris or Trump, will face a chronic, sustained $2 trillion per year deficit that has been spawned by decisions made during the pandemic and expiring tax cuts from the Tax Cuts and Jobs Act of 2017. Yeah. Plus, obviously, grappling with the Congress approving a new target for the debt ceiling on a bipartisan basis, and that expires in January. Right. This new president coming in is going to be confronted with the most severe fiscal situation that I've seen in my policy days, and I think that will dominate those politics, as you say, in a narrowly divided Congress.
French, one final question. My major issue with Basel is I hope it's still imported from Italy, for the kitchen. You're looking at a different Basel in Basel, Switzerland, and what it basically is out of the carnage of 2007 is we've got to load up capital in our banks. You have very un-French Hill-like language. We are gold-plating America's banks. Discuss.
So, Tom, Basel is, as you note, about a 40-year trend now in trying to harmonize capital standards between the global banks. And so we're now on Basel III, and they call it the Basel III Endgame. I didn't like Basel I. This sequel movie is not much better. But our banks are the strongest in the country, in the world. We have the highest capital in the world. Right. And many of us in Congress, and I think in the private markets, felt like the Michael Barr Federal Reserve proposal for Basel III Endgame overdid it. It penalized American banks in competitiveness to European banks. Even Marco Draghi in Europe said the purpose of Basel III was to have capital neutrality, but change some of the risk ratings. The Barr proposal increased capital for American banks nearly 20%. And that's why I've called on this entire proposal to be reproposed, resubmitted for comment.
One final quick one here. We got to go cover Tigers baseball. But French Hill is just simple. Does Arkansas have the toughest football schedule in America? It's like every week they're playing somebody large.
It's the toughest schedule. We have a great dynamic team that wins the statistics but loses the games. We've got to hold on to the ball and stop fumbling.
Very good. Coach Hill, thank you so much. French Hill on Arkansas. Texas A&M last week, Auburn the week before. In Paul, Tennessee, I didn't know Tennessee's ranked number 4.
I know, they're back.
They're back.
Kind of like Peyton Manning back.
It's Knoxville, right?
Yeah, Knoxville, absolutely.
They're in Knoxville, okay. Yep. Tennessee at Arkansas. French Hill, thank you for those comments, particularly about the debate tonight with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, and John. North Carolina Governor Roy Cooper says that recovery from the catastrophic damage left behind by Helene last week will be a monumental task. More than 130 people are dead and around 600 people are unaccounted for in Buncombe County, where communications have been down and roads are impassable. Main roads into Asheville were washed away or blocked by mudslides. President Biden was asked about getting FEMA aid to people who are stranded.
The question is not whether we get more. This is a list of every resource we're getting in there, but the question is how to get it in. It's hard to get it from point A to point B. It's hard to get it if some of these roads are wiped out.
President Biden plans to survey the devastation in western North Carolina tomorrow. Vice President Kamala Harris stopped by FEMA headquarters in Washington as FEMA mounts recovery efforts in the aftermath of Helene. Harris thanked FEMA workers and told victims of the storm the administration is working to bring aid.
President Biden and I and all of the folks behind me are with you. We will continue to do everything we can to help you recover and to help you rebuild, no matter how long it takes.
Former President Donald Trump visited Valdosta, Georgia, one of the many areas devastated by the storm.
We're not talking about politics now. We have to all get together and get this solved. We need a lot of help. They have to have a lot of help down here.
Trump also falsely claimed that Georgia's Governor Brian Kemp had not been able to reach Joe Biden. Kemp refuted Trump's allegations, saying he talked with the president Sunday, and an angry President Biden responded.
I've spoken to the governor, spending time with him, and he told me he's lying. I don't know why he does this. And the reason I get so angry about it, I don't care about what he says about me, but I care what he communicates to the people that are in need.
The vice presidential debate will take place tonight between J.D. Vance and Tim Walz. The CBS debate will be simulcast on Bloomberg beginning at 8 p.m. Wall Street time. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg Tom, Paul, John.
Okay, Michael Barr, thanks so much. For our international audience, the 2 out of 3, you win 2 games out of 3, because of pitching is the coolest thing. We go to Bloomberg Surveillance Tiger correspondent Michael Barr. So Skubal, the best in the league, pitches today.
Yes, he does.
Can he pitch tomorrow, like 2 innings on the back end? Or does he pitches again the 3rd game if they have to go?
If he has to go, he's going to go. Because, look, there's no tomorrow if you're knocked out of the playoffs. So, yeah, if he's got to go, he's going to go.
I mean, they have said they have Skubal and then chaos. Is that accurate?
I tell you, Skubal is that young man. I'm going to get his jersey. I'm pumping up his jersey outfits right now. But yeah, I mean, he's got to go. There's no tomorrow.
I don't think they make a Skubal jersey for you or me. He's so cut and chiseled, I don't think we're going to get into it. Exciting stuff. Detroit, Houston this afternoon. Oh, we're going to cut short the surveillance nap for that. Right on the screen here, futures at -5, the VIX 16.87. I noticed a 10-year real yield. Thank you, Michael Kushma, 1.57%.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News. And with this Bloomberg Business Flash this morning, kicking off the fourth quarter of the year, the Dow and the S&P 500 starting the trading day at records. In the U.S. today, we're going to see data on labor supply with the JOLTS survey and some broader manufacturing conditions with the ISM. Both figures expected to be largely unchanged from the previous reading. Of course, at the end of the week, that's the big number when we get the employment figures. Oil lower, oversupply headwinds dictating trading action today. Data also showing euro area inflation easing below the ECB's 2% target for the first time since 2021. And S&P futures 4 points lower right now. The Dow futures down 104. And the NASDAQ futures, they're up 8 points. This is a piece of data that really kind of surprised me. In the last week from Hurricane Helene, more than 40 trillion gallons of rain drenched the southeast. 40 trillion, that's enough to fill the Dallas Cowboys Stadium 51,000 times. Fascinating. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Greatly appreciate that. This is an honor. First of all, let me say, Bloomberg Surveillance, and we thank Interactive Brokers. Bloomberg Surveillance brought to you daily by Interactive Brokers. And their portfolio analysts consolidate and analyze all your financial accounts on one powerful dashboard for free. Sign up for a portfolio analyst at ibkr.com/free PA. Let me spell that out. ibkr.com/FREEPA, free PA. Thank you, Interactive Brokers, for your coverage. Every professor has cottage industries. One of the tangential ideas for Julie Norman at UCL London is to cover the Baltimore Orioles for the entire London media. She's on top of that story this morning. But tragically and seriously, she is absolutely definitive on terror in the Middle East. She picked it up early and far too often. We're honored to speak with Professor Norman this morning. Professor, there's Beirut close to the southern border, and then there's lots of Lebanon up to Tartus in north, up towards Syria. Is Hezbollah in the entirety of Lebanon or just the south?
Yeah, well, good morning, Tom. And I wish we could just talk about the O's a little bit more. But you're right, there's obviously a lot going on in the Middle East these days. And for Hezbollah, they're an interesting group in where they're located. Their main stronghold, and the one that Israel focuses on the most, is in the southern part of Lebanon, the part that borders with Israel. But they also have another stronghold in the northeast of Lebanon along the Syrian border. So that's one reason why some of Israel's strikes have targeted other parts of the country beyond just that southern tip.
What is your, beneath the headline data in the sameness going, Telegraph, FT, Bloomberg, and all, our wonderful coverage out of Tel Aviv, what is the story not being told right now, Professor Norman?
Yeah, I mean, I would say one thing is that there's been a year of diplomatic efforts to try and prevent what's happening now. And I think that piece is sometimes forgotten, that the U.S., France, numerous actors were trying to broker something that could, prevent this kind of escalation. I would also point out that there's a 2006 UN Security Council resolution that set essentially a border in Lebanon that was supposed to have a buffer zone between Israel and Hezbollah that has been violated. So I would say from Israel's perspective, they had tried the diplomatic track and feel this was a necessary move. Obviously, many others disagree with that assessment, but that was very much the thinking in Israel, talking to people there this summer.
So, Professor, we have reporting this morning that Israel has begun targeted ground raids to uproot Hezbollah in southern Lebanon. It seems like Israel is kind of settling all debts with all parties out there following October 7th here. Overall, what do you think Israel's strategy is these days?
Yeah, well, I think you said it. I mean, it's a couple of things. One, in terms of this current operation, there's been tens of thousands of Israelis who were uprooted from their homes in northern Israel because of essentially daily rocket attacks from Hezbollah into the north. So part of the short-term aim is just getting back control over that territory and getting people back to their homes. But I would say the bigger objective for Israel is to reassert their security deterrence, their security superiority in the region, and to just flex that a little bit after the atrocities of October 7th, after being caught on the back foot, and to come back on the offensive and really send a message to all groups in the region, not just Hamas and not just Hezbollah.
The distance from Tehran to Beirut is inside of 1,000 miles. What does everybody in between Tehran and Beirut want in the Arab world? What does Riyadh want? What does Kuwait want? What does Abu Dhabi want?
Yeah, it's a good question, Tom, because the Middle East itself is not, there's not a straight alignment on this.
Is it just, I don't mean to interrupt, but is it just Sunni Shia? Is it just as simple as that?
It often falls along those lines, but I would say it's definitely not that simple. I should even point out that Hamas is mostly a Sunni group, even though they're in this, Iran axis of resistance network that is mostly Shia and backed by Iran. So even that relationship is not neat on sectarian lines. I think the bigger push here is a massive regional power rivalry between Saudi Arabia on the one hand and Iran on the other, and the states around them who are linked to them for different kinds of interests, some ideological, but some more geopolitical. And so those two states are, very much at odds with each other. And that's one reason why you don't see Riyadh, backing up anything that's being done. They see Hezbollah and Iran as just as much of a threat these days as I would say Israel would say the U.S. would too.
What percentage of Hezbollah is degraded right now? I mean, Paul alluded to that earlier, but I can't get a handle on the how muchedness of harm other than the headlines of leaders being killed.
Yeah, I'm not sure that anyone really knows, Tom. I mean, we estimate that Hezbollah has around 50,000 operatives, but even that number is an estimate. It's been put higher and lower. And they have an arsenal, again, estimated around 150,000 different types of rockets and missiles that Israel is trying to degrade. So just to say there's been a lot of damage, obviously at that leadership level for sure. But in terms of full operational capacity, that still runs pretty deep, and that's Israel's motivation, I think, for this ground invasion to try and uproot some of that too. But it's pretty extensive, and that's why they've been seen as such a threat.
Do we have to go there? Should we go there? She'll come back if we ask an Orioles question.
Sure. Well.
Julie, do they have the pitching? Do they stack it like the Tigers will and just go to one or two pitchers to beat the Royals?
I mean, Tom, I am full in for October. I will say pitching has been a bit of a challenge for the O's this year, but I think we're going in strong now, and just we're ready. I feel like they're ready for it. They just got to get through these few weeks.
It's a joy to see Jim Palmer on their announcing team as well. It's great to see Julie Norman in the background for those of you on radio worldwide and on your commute across the nation. In the background of her London abode is an Orioles cap.
There you go.
From a few years ago.
She's a fan.
Julie Norman, thank you so much. Your perspective there on your wheelhouse at UCL, which is terrorism in the Middle East. I can't say enough about Professor Norman's work. I mean, Paul, it's sort of like the news flow. They say at home, what are you doing? And I said, well, it's like 6 stories going on at once.
Yeah, I mean,
how it
again,
feels.
the Middle East story. We've got obviously the strike on the docks and the economic impact there. Oh yes, we're still in a presidential election period with the vice president.
And then we've got economics, finance, investment.
Exactly.
And when do we get to Dow 45,000? We're trying to not forget this, folks. I mean, is it Nike? His earnings today, I think.
Probably, yeah.
Is that right, John Tucker?
After the close, yes.
Yeah, after the close. I mean, we forget that there's the real investment world as well with all these other stories. I'm looking at dollar strength, 101 on DXY, a little bit of dollar strength. Paul, look at oil. Come on, look at the news flow. And Brent's supposed to be 80, and West Texas Intermediate, $67 right
I know,
now.
exactly. And I showed John Tucker this weekend. I filled up the vehicle at $2.85
Very cool.
a gallon. So that's right where you can feel it there, folks.
Otis and Steve Cropper, 3 days before Otis died.
Georgia, headed for the Frisco Bay. I've had nothing to live for, and look like nothing's gonna come my way. So I'm just gonna sit on the dock of the bay, watching the tide roll away. Ooh, I'm sitting on the dock of the bay, wasting time.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Are these stocks under-owned by institutional Wall Street?
A lot of these companies talking about generative AI.
With Lisa Mateo on markets.
Investors just worried about the ongoing sales slump in China.
And Michael Barr with news.
A ship traveling through the southern Red Sea has been attacked.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo, Lisa on assignment, John Tucker in for the map, the quality, his knowledge of the geography of Port Elizabeth and Port Newark, New Jersey. We'll get to that in a moment. We welcome all of you on YouTube, worldwide and a quarter, 99.1 FM Washington, 92.9 up in Boston, Bloomberg 1130 in New York. On YouTube, again, subscribe. We've got a hugely busy morning here. Paul, markets churn, real yield a little bit lower.
Yeah, Tom, I'm looking at the markets here. I got the S&P pretty much unchanged. The NASDAQ a little bit of a pop here, but a little bit of churn in the equity markets. Not much going on. 10-year Treasury, we're still got 10-year Treasury around 3.74%. The 2-year, 3.62%. So that's kind of a steepening yield curve, I guess. Is the
new quarter, earnings in season.
Exactly.
I mean, earnings, one of the banks, when's JP Morgan? I don't know.
They come up in a couple
3
weeks,
weeks.
Right? Yeah, 3 weeks, yeah.
Huge news flow. We say good, just great, equity coverage this morning. Kevin Gordon with us, and we've got Brent Schutte coming up.
Oh, good.
On asset allocation as well. Stuart Kaiser here in moments. Right to it from the Interactive Broker Studios with our Bloomberg Business Flash, John Tucker.
All right, thanks, Tom. S&P 500 notching another record close along with the Dow Jones Industrial Average yesterday. As we start the new quarter, S&P futures right now down a point. Dow futures 97 points lower than NASDAQ futures right now. They are up 21 points. Among the most actively traded stock this morning, shares of Boeing. Boeing thinking about selling new stock to raise at least $10 billion. They're trying to replenish a cash reserve. That has been sapped by the ongoing machinist strike at Boeing. CVS Health, also among the most actively traded in the pre-market. Higher right now, the pharmacy chain weighing its options. And of course, as you mentioned before, after the close of regular trading in New York today, we are going to hear from Nike with their earnings report. As we look at 2-year yields, 1 basis point lower, 362. The 10-year, 3 basis points lower, that is at 374. And crude oil, Brent crude, the international benchmark down 0.7%. NYMEX crude right now down 0.8%, 67.62 a barrel. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul, Tom.
Thanks, John. We're going to come to you in a moment. Bloomberg Surveillance brought to you by Cohn-Resnick Advisory Assurance Tax. Discover optimization strategies that are helping CFOs make their finance function more competitive and more resilient. Talk to Cohn-Resnick's advisors. Cohn-Resnick, thank you for your support. Okay, we are fortunate, folks, that we have somebody with a truly encyclopedic knowledge of the number one port in America. There's Savannah, Paul, you mentioned, and the Gulf Coast and all that. We go to John Tucker here. Now, this is near Newark Airport, John. In the complete constraint of the biggest port on the East Coast is the Bayonne Bridge over the Kill Van Col.
Sure.
Yeah, it's the bridge. It's a big span. Actually, they had to lift that span just a few years ago, the Port Authority,
to get the boats in.
The Panamax ships, the new type of carrier container ships to go underneath it. They actually had to lift it. So it's the Kill Van Col. The Bayonne Bridge would cross that, going to Staten Island from Bayonne. And on the other side, you have the Goethals Bridge down the Arthur Kill, which straddles Staten Island.
The only thing I know when I go into Newark is a Budweiser factory next door.
Exactly.
It's there.
Yep.
When you think of the Port of Newark, the Port of Elizabeth, John Tucker, what do you think of with your decades of living there?
Giant container ships. Containers which were invented near those ports way back when in the 1950s.
Okay.
Before that, you had all the longshoremen with the nets carrying all the cargo individually, and now you just put it in a container. Very easy to automate.
It's just as simple as...
I don't know, where do you learn that stuff? They don't teach
He's
that in
a
school.
font of wisdom. I mean, he's great. She's going to have breakfast, a late lunch at Maurice River Diner in Elizabeth Port, New Jersey. Danny Berger joins us right now from New Jersey. Danny, what do you observe on the tarmac at the two ports?
The picket line is up, Tom. It is happening. And otherwise, there is not any movement on the ports. By the way, this being the place that they invented the containers to put the container ships, at that same time, the longshoremen looked on in horror that their jobs were being replaced. That is much the scene of what's happening today with the threat of automation. The two sides are talking, Tom, and that is the good news. Both releases that we've had from the longshoremen and the employers say that they are starting to move from their positions. But it is still not good enough for the longshoremen. The USMX, that's the United States Marine Association, has said that they are offering a 50% pay increase. But crucially, they wrote that they want to retain the current language around automation and semi-automation. The International Longshoremen Association says that that's not good enough and that the USMX own this strike now, and it is up to them to meet them where their demands are.
So, Danny, I mean, a 50% increase over 6 years seems reasonable, but I know the other side is maybe looking for as much as 80%. Is there a sense that that can be, kind of find some common ground in the middle?
Right. So the exact figure is 77% increase. And just to sort of give you an idea of what these folks can earn at a very baseline level, 85,000 is where they are, 200,000 if you're talking about overtime. But, Paul, these are incredibly dangerous jobs. And you have to remember the West Coast also just had negotiations, too. So they are getting paid more. Now, in terms of common ground, we don't seem like we are there yet. Again, these talks went until the 11th hour. But the longshoremen have a lot of leverage right now. They have an administration that's extremely friendly to them, and there are not enough people who want these jobs. So the USMX might have to get closer to 77% if they want this ended in a few days.
Danny Berger, thank you so much from the Port of Newark and Elizabeth, New Jersey this morning. We digress here. Red and green in the screen. Q4 starts. I mean, if you got to frame out where the equity markets are, because Stuart Kaiser, Paul, did not say sell in May and go away. No. Stuart Kaiser did not say get out of September. I mean, we need a reset.
We do. And, I mean, Stuart Kaiser joins us, head of U.S. equity trading strategy at Citi Global Markets. Stuart, you came off the trading desk of Citi. What are your traders seeing from their clients these days? What are they buying? What are they selling? What's the activity look like on your desk?
Yeah, look, I mean, if you took a quick look back at the third quarter, what you would see is an investment community that was buying quality stocks, but also broadening out their portfolios a bit. So I think people being careful the type of stocks they own because of, this rolling recession risk we've been fighting. But, what we saw in last quarter's earnings was the 493, not the Mag 7, actually generate positive EPS growth.
Okay.
So it's giving you a broader field to play in, but people are still keeping it close to the vest, I would say.
I know when Andrew Hollenhorst publishes, you throw it right in the wastebasket. But on the way you may glance at the cover, if we get a Hollenhorst set of rate cuts, what does that do to Stuart Kaiser's world?
Look, Andrew on Friday has 70,000 K of jobs, and basically that jobs outlook is what's driving the large.
It's an Anna Wong number.
Yeah, that's it. So, that jobs number is what's driving that rate cut assumption. So I think if you're cutting rates because the labor market's decelerating like that, that is bad for equities in our view on a net basis. If we get lucky and the Fed is doing pure insurance cuts, you're getting 150K jobs, which is where consensus is, and you're getting the rate cuts. I think that's quite positive for equities, which is why Friday is just, such an important day and an event for the markets. Probably the most important day of the month is
Really?
this coming
Okay.
Friday. Yeah.
So, going into that print, I can't imagine people on the desk are taking much risk these days.
Yeah, I think what we saw the last month is a lot of event risk trading. So you're trading a day of events, and then between the events, the market's kind of sitting on its hands a little bit to try to digest stuff. So I think what you'll see today is a pretty quiet week in the run-up to Friday.
I mean, of everyone we talk to, you're the only one that lives the wonderful show industry. It's out of the London desk, Canary Wharf and all that. But I mean, you Canary Wharf, you live it. Stuart Kaiser, what was your desk like when China once, China twice provided various and sundry stimulus? What was the level of bedlam like?
Look, I think initially it was a little bit of we've seen this before, but then when they continued to follow up with it in terms of new announcements, what you're having here is very negative sentiments towards China that's accumulated over a number of years, but a very large package that the Chinese policymakers seem to be signaling they're gonna repeat. So I think what you're seeing is effectively, people are getting sort of shocked by the tactical
Was there
move.
Profanity on the desk like in industry?
I would say there was some choice words.
Choice words, okay.
Choice words.
Good morning,
shared.
Jane Fraser.
Look, so I think if specifically on China, I think you're in a situation here is they shocked the market, and the question is, when you get back from Golden Week, is there follow-through, or was this window dressing ahead of a big political event? And if there's follow-through, then the positioning is not there on China, and you could get some people forced into it. So, markets performing well. We'll have to see what happens after this, vacation week for them, and we'll see how much follow-through there is.
How about valuation in the marketplace here? We've seen the S&P equal-weighted index actually outperform a little bit recently, so a little bit of a broadening out in the marketplace. How do you guys think about valuation in this market?
Valuations is high but not obscene, I guess is the way I might put it. You're kind of like upper quartile, upper decile, but you're not at max levels. Look, the bottom line for us, valuation, we view that as potential energy. So if you do get a sell-off, there's more room to fall, but you need a catalyst to release potential energy, turn it kinetic, and that catalyst is likely going to be the Fed or the jobs market. So it's an issue, but we need something to release it.
I mean, I don't know where it is, but Apple's out near, not to a new high. I mean, Mag 7 update from Stuart Kaiser.
Look, Mag 7, I think, is still the core holding of most investors, Tom, and that's a large, long position that's been built over a number of years. But truth in advertising, last quarter was solid, but not a knockout quarter. So I do think you've got people in this large core position that at this point, earnings season is going to be very, very important this time around. And for NVIDIA early next year with the introduction of the new chipsets going to be very, very important. So my summary would be it is still a core holding, but people are asking some questions after last earnings season.
WTI crude oil below $68 a barrel. What's the energy call for you guys?
Honestly, oil to me has been probably one of the more confounding trades over the last 12 to 18 months. If I wrote you a list of all the catalysts and events that happened, you wouldn't expect oil to be where it is. Yep. U.S. is producing a tremendous amount of oil. Russia's probably bleeding some discounted price oil onto the market. So I think it's hard to be particularly bullish the oil price, just given A, the structural challenges, B, the event risk that the market has absorbed, and C, the amount of oil that the U.S. is putting out. So for now, I think we're sort of on the sidelines with that, at least from an equity perspective.
Stuart Kaiser, thank you so much.
Thank you.
It was Citigroup this morning. Too short a visit. Come back again soon. Liz Ann Saunders out from Arbor Data Science. with the people importing into the ports, Walmart, number one, no surprise, IKEA, number two, Samsung, and then Sephora and Ulta.
Oh, yeah.
I'm kidding.
Exactly.
But that's what it's like. And, you know, the AP had a great story, like serious stuff, bananas.
Really?
Like bananas come in those containers.
Yeah, I guess we don't grow
And it's like, what are we going to do about bananas? Some people are air freighting.
Yep.
Many are shifting to the West Coast,
Yep.
where Costco is.
And then you got to truck it all. I mean, put on a train or put on a truck and do all that
but
stuff.
it's like serious logistics stuff going on here.
Yeah, I mean, it's half, the trade comes in through those ports. So we dealt with that on the West Coast a couple of years ago, and that was definitely a disruption, and it takes a while to work the
Danny said
disruption
these
out.
are a bigger ask. This is like a bigger
This is the automation thing. I mean, that's.
I think
they're
it's
really
a catch.
scared.
I look at it like the nurses in Boeing and everybody else. It's a catch up from COVID.
Yep.
Headline out, Paul, quickly. Charles Schwab says Mr. Bettinger to retire as chief executive officer.
Yeah, so, I mean, a heck of a run. So we'll see who's next there.
Kevin Gordon shortlisted.
Shortlisted, exactly. That's why he had to leave so quickly.
That's why he had to leave early in the last hour. Red and green on the screen right now. The VIX 16.83. In the yield space, yields in a little bit here. West Texas Intermediate, 67 the barrel. Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages, they are mixed right now. Dow futures down 104 points. That's down 0.25%. The S&P E-mini futures 4 points lower. NASDAQ futures, they're higher. They're up 10 points. Fed Chair Jerome Powell's attempt at dissuading hopes for another jumbo rate cut. No barrier to U.S. stocks. S&P 500 and the Dow, they opened the fourth quarter after closing at records in yesterday's trading. J.P. Morgan Chase says the impact of that port strike will be up to $4.5 billion a day. A fascinating story on the Bloomberg about Humira, a top California health plan set to offer one of the world's biggest selling drugs for free. This is Blue Shield of California striking an unusual deal to buy a lower cost version of Humira directly from a manufacturer, bypassing the giant pharmacy benefit managers that normally determine which maker's drug will go to tens of millions of Americans. Brent crude, that is lower, down 52 cents a barrel, 71.18 right now. NYMEX crude, West Texas, is down 0.8%, 67.64. A 2-year yield, 1 basis point lower, that's at 3.62. The 10-year yield right now, 3 basis points lower, that is at 3.74. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Again, on YouTube, subscribe to Bloomberg Podcast. Huge growth there over the span of the summer and September. We look to continue that strong on YouTube. Subscribe to Bloomberg Podcast. You know what you get? I didn't know this. Bloomberg Daybreak Europe, Paul.
Yes.
They do the show, and within 15 minutes, they have the top 15 minutes of the show in London summarized as Continental Europe Awakens.
Boom, perfect.
Stephen Carroll.
Who does that? Okay,
driving
excellent.
that
Very
with
good.
Lizzie Burden and others. And
Excellent.
It's like a huge success. Like, you wake up in Brussels and you go, what do you got?
Right.
You got Bloomberg Daybreak all done in
quick.
15 minutes. And this is an important interview. Things have changed. Things changed in September. Mark McCormick lived it. He aged. He got his first gray hair. Joining us from TD Securities this morning. What did you adjust, Mark, with what Beijing did to the yuan and to the rest of the global market?
Well, I think one of the things that we're doing is it's kind of just making things evolve the way they've already been playing out. I think if you talk to any investor that's covered FX and that's focused on FX, the number one thing they're talking about since the summer is the carry trade. It's a very simple strategy. You buy higher yielding currencies and you hope there's no volatility. And that trade has been disrupted multiple times this year. And that's one of the things we've been very focused on is we've been bullish the yen and also looking for episodic shots of volatility. I think the one thing that's very interesting, if you take our China growth factor, which uses different market prices to give us like a very high frequency nowcast run rate of the Chinese economy, the one strategy that correlates very well with is the unwinding of the carry trade and a rotation to value. So I think one of the things that we are seeing is that we're accentuating the value story in FX, which is Asian currencies are undervalued because they've been borrowed and the capital flows have been moved against them. And the biggest losers here it's probably going to be the Latin American currencies like the Mexican peso.
So what's your pair here to play this game?
So it's tricky because I'd say there's a tactical and a strategic. Yeah, I'd say tactically we still like the U.S. dollar, but that is going into the election.
Wow.
Markets pendulum have swung too much, and I'd say in terms of our positioning indicators, we are max short the U.S. dollar over last 6-month period. We like selling the New Zealand dollar going into the U.S. elections, and on the data we have this week, we are very bullish the yen. So I'd say that the longer term trades is essentially being short euro, being short sterling relative to the yen. I still think that's the big trade. It's just that in terms of positioning and execution getting into it, this is not the right time. You need to wash out a little bit.
Mark, so we did have some pretty big moves by the PBOC, and the market seemed to like what's coming out of China. When you talk to your clients, do they feel like this is a real significant long-term move, or is this something a little short-term here? Just a little bit of a fake?
I think they've changed expectations, but like everything else, it's going to come down to the reality of the data. Like every market participant is stuck in data dependence because every person they watch and every investor they watch and then every central bank they all have to follow is data dependent. So I think the interesting story that's happening in the short term is that U.S. data is actually better than European and Chinese data. So actually the burden of proof here is that U.S. data is coming in better. Consensus is revising expectations higher. The data trends themselves are improving, and also data surprises in the U.S. are positive. So China's basically changed the game in terms of resetting expectations because they've been behind the curve for the last couple of years, and now they're trying to get ahead of the curve. But Chinese data is still going to be very poor for the next couple of months until we start to see what comes through in terms. So essentially what we'll see is whatever comes in as Chinese economy underperforms, they're going to deliver more stimulus to support it. So it's like, to me, for the markets, it's going to be a second order effect. It's not going to be the first order effect. And the first order effect is to deal with the narrative and the position that we have right now and the event risk that we know. So I think a big piece, though, is that China has stabilized their equity market. And that is, if you have Fed easing, ECB is ready to cut more, central banks are easing financial conditions, and now you've got monetary and fiscal stimulus, which has been a very important policy driver since the pandemic, moving in the same directions. At the very least, this puts, I think, it creates an environment where should we be worried about stagflation or should we be worried about reflation? Because everything that we're doing is creating more inflation down the road. But I think, again, at the very least, markets are going to try to figure out which equity markets do we want to buy. But if the Fed is basically easing and we're seeing easing financial conditions, it's going to help U.S. market as well.
Oh, but come on. Within your studies, it sounds like you're saying there's a race to the bottom. Is that all this is? We've got inflation, we've got massive debt, and we're going to basically take the debt and depreciate the currencies like we've done since biblical times?
Well, yeah, I think, essentially, I think every central bank around the world and governments, again, if we went through this entire year, we've had half the world essentially have to vote. So, there's an incentive to deliver stimulus. There's an incentive to produce growth. And again, most central banks have been basically supporting that endeavor. So it could be a race to the bottom, but it just feels in the times of, all the things that we're dealing with in terms of geopolitical uncertainty, economic uncertainty, technological change, governments are doing their best that they can at the moment to deliver growth. And that seems to be their objective. And the interesting part is we are doing this at a time where inflation's above target. And central banks believe that they have been the reason why inflation is lower. But I think there's also a reasonable debate on the other side that is this just a washing out of all the impacts of the pandemic and the supply chain shocks? And are the central banks playing a very dangerous game, easing this quickly, this significantly, with inflation already above target?
Love it. Mark McCormick on a resilient dollar. TD Securities, he absolutely nailed that trade 18 months ago. And now, folks, it's time for Bloomberg surveillance, dinosaurs mating. I saw the article yesterday on Dish Network.
Oh, boy.
Are you kidding me, Paul? Discuss.
I've tried to get that deal done for 20 years.
You have.
And we pitched it. We didn't pitch it to the boards of DirecTV or Dish. we pitched it to the regulators down in Washington, D.C. We kind of said, this cord-cutting thing is coming. It's going to be real. And the only business these satellite companies have is video. They don't have the broadband business that the cable companies have and the telco companies have. They're one-trick ponies, and they're going to go out of existence.
So this is DirecTV and Dish, antennas on the side of your house. And I notice it, over 10 years, whatever, it's really shrunk down.
Yeah.
Why is it going to stop not shrinking?
It's not. And they've lost in the last, and this is according to Moffett-Nathanson research I just read this morning, that industry has declined by 2/3. They've gone from, and in terms of households, so they're just a fraction of themselves. And this new combined DirecTV and Dish, it's going to be owned by private equity. TPG Group yesterday announced that they are buying.
Is the government going to let them do this?
Yeah, absolutely. I mean, they
don't have a choice.
They don't have a choice. So, TPG is just going to own it for the EBITDA and the cash flow and pay off the debt and lever up the equity.
And there's
value.
some payouts to AT&T, I saw, and all that.
Yep. So it's just a fraction of what it was even 10 years ago.
I sort of slid into my 4-day-a-week thing, folks, here into the end of the year. What a joy!
You can do that.
I was here all summer for you.
Exactly.
One.
Take care of the Fridays.
4th of July, I'll work. Labor Day, I'll work. And it was great. Just
John Tucker's not buying it.
How's the Bayonne Bridge this morning?
It's higher. I love the fact that I remember when they raised it. I'm like, how are they going to do this? It worked.
Great. We got a huge out on YouTube. Thanks for the response to John Tucker's wisdom on the strike on the East Coast. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Right now, the major averages, they're mixed. Dow futures down 110 points. That's down about 0.25%. S&P futures down 4, and the NASDAQ futures right now, they are up just about 9 points. We are starting the new quarter, with records for the Dow and the S&P 500. Those closes yesterday. Also, some indications of a sustained rally. The fact that gains kind of broadening out, seeing a pickup in the S&P 500 equal-weighted index relative to the benchmark. Apollo Global Management expected to generate $10 billion of annual earnings across its asset management and retirement businesses by 2029. The forecast coming in an investor presentation today. It's being driven by investor demand for private credit and annuities. And personnel changes. Charles Schwab CEO Walt Bettinger retiring at the end of the year. President Rick Wurster stepping into that role. And the parade of earnings will continue after the close. We are going to hear from Nike. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. I'm just looking here at the Bayonne Bridge cam with the Peregrine Falcons, and there's no boats in the distance. I mean, it's like, seriously, like, it's dead, right?
Ships aren't going, right?
Ships aren't going.
Not right now. No, I don't know if that's particular to the strike.
But if they're out, like if they're in Atlanta off the Azores and they're coming over, where do we put the boats, John Tucker?
They put them
right by your house,
right
by John's house.
I can see it in before they get into the Sandy Hook Channel, Raritan Bay, New York Harbor. They stack them up.
They stack them up.
Out in the ocean, where they wait for the Sandy Hook pilots to come on board and take the ships in.
But they can't go in because they can't unload, right?
And it was like during the pandemic.
So if we have a 116-day strike like last time, you got 47 boats off your front porch, right?
Exactly.
Yeah, and it's interesting. Some of the locals took their boats during the pandemic with supplies and, Christmas presents and stuff like that to the guys who were stuck on the boats.
Oh, you take the Boston Whaler route.
Yeah.
Are you taking out Tito's or Beefeaters?
No, there's no drinking aboard those.
Thank you. John Tucker, our surveillance congestion correspondent, on the potential congestion of boats off of Port Newark and Port Elizabeth. Danny Berger out there, we'll get to her here at some point. Our economic indicators in a busy economics week. Jobs Day on Friday. It's brought to you by Commonwealth, supporting more than 2,000, my eyes failed me there, 3,000 independent financial advisors with a 2-to-1 advisor to staff ratio, small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about their consultative support and technology. Commonwealth, thank you for driving our economics, including Matthew Lazzetti with Deutsche Bank. I don't care about the past. I don't care about Powell at the National Association for Business Economics. All of a sudden, I'm hearing sub 100,000 Jobs Day non-farm payrolls. Have you adjusted down sub 100,000?
That's not our expectation for Friday. We're closer to 150,000. We think the unemployment rate rounds up to 4.3%. But you clearly have had a slowing trend in job gains. We've had downward revisions to prior months. So is it possible you get sub 100,000? I would say absolutely it's possible. It's not our baseline expectation, though.
Yeah, I was just looking at a note from Torsten Slok, our friend over at Apollo, and he says 4.2, 4.3. That's still full employment. I mean, that's still a good labor market, right?
Ex-Deutsche Bank.
I know.
I mean, Matt and Torsten
all the same school.
are best buds.
Torsten's a good friend.
Yeah, exactly. So that's still good. I mean, if I'm a politician, I'll go up and say, hey, our economy's still good from a labor perspective.
No, it is. I mean, certainly if you look at the levels, 4.2% on the unemployment rate looks great. And actually, Chair Powell yesterday was suggesting that. And I think you hear that from all Fed officials. The concern is in trends and momentum.
Okay.
And we've seen an 80 basis point rise in the unemployment rate since the bottom. If that were to stabilize here, fantastic outcome. The Fed goes by 25 basis points increments from here. I think you get a lot more confidence on the labor market story because the growth story is good. We saw that last week, upward revisions to growth, upward revisions to income. The savings rate looks higher. The consumer backdrop looks more supportive. So if you were to have a stabilization in those trends, I think you'd have a lot more confidence there.
So again, from your perspective, how do you feel about the underlying trends of the labor market? I think you could spin it either way, either the trend's not our friend or the absolute levels are okay.
So I think both of those things are true.
Okay.
The trend is not our friend.
Okay.
In a lot of these indicators, the jobs data, the unemployment rate, we'll get the JOLTS today, where the quits rate, the hiring rate have all been kind of trending in a lower direction. I think there's reasons to think that we get some stability there. If you look at alternative job openings data from NFIB or Indeed, there has been stability over recent months, so perhaps the JOLTS data shows stability there today. So our baseline is we are basically normalizing. We do need to remember we're coming off a pandemic. You had unusually high job gains. You had an unusually low unemployment rate. You had an extraordinarily tight labor market. The direction of travel was clear towards a looser labor market, but we're in a little bit of an uncomfortable area for some of these indicators at the moment.
Let's back up. You absolutely nailed the mystery about when a recession's going to be. You said we model a recession, but it's way out. We just don't. I remember this clear as a bell. You nailed the call that we can't call a recession, even though we see the framework of it. Revisit that right now. We're 3%, 2.4% GDP. Everybody's been wrong on growth. Can you still frame out a recession?
It's not our baseline. I think as you look at the underlying growth data, particularly the consumer, we see resilience there. No doubt there's greater differences, there's greater spread, there's greater heterogeneity, there is some pockets of weakness.
Right.
But you can't look at that last week's data and think that you have a soft consumer spending outlook. Income was revised materially higher, the savings rate was revised materially higher,
Right.
wealth to income is near record high levels. So I think as long as the consumer continues to chug along, and I expect it will, we don't get a recession.
Now, from the Deutsche Bank Center, it's a Time Warner Center, Paul. The Deutsche Bank Center. It's surrounded by 6 5-star restaurants. George Saravelis doesn't have this in London. He's going out to Greer's to get a roll. And the answer is, how do you dovetail in Saravelis' call on currency into what you see in economics? What's a dollar going to do?
I think he is largely aligned with how we would view the U.S. economy, which is the Fed is likely cutting, and they're doing so to prevent greater slowdown, and they're doing so because inflation has come down. But at the same time, currencies are about differentials, and so it's about how the Fed is cutting relative to the ECB. Mark Wall in European Economics updated our ECB call today, is expecting them to cut by 25 basis points in October. And because of slower inflation and weaker growth in Europe, there might be greater downside for rates in Europe.
So yet, of course, one day at UCLA, you missed it because you were out watching Dodgers ball at Chevez Arena. But
I'm a Mets fan, and I'm very excited about the Mets right now.
We're going to do that. We'll do that right now. But the answer is a race to the bottom is what this sounds like to me.
No, I don't think it's a race to the bottom. I think it's a question of where neutral is and where do we ultimately end up. I don't think it's that we are going to zero or the Fed is going to cut deeply into accommodative territory. I think you have a fundamentally stronger U.S. economy with potential growth that's stronger and rates that will remain higher as a result.
All right, so is it fair to say that this Federal Reserve has, in fact, negotiated a soft landing? Can we call that?
Powell is very reluctant to claim that, and I will be so too, because we were in the recession camp for some time. The unemployment rate move is still leaves some kind of inklings of worry there.
Okay.
If we were to get stability on the labor market, I think that would kind of give you the full confidence to declare soft landing. I think we have the preconditions in place. We just need to see that play out in the data of the coming months.
Do you get nominal GDP at any point under 4%?
Not on our forecast. We think real potential growth is above 2%.
Really?
2.25 most likely, and that may be conservative given what's happened with productivity growth.
Do the mathiness from the bottom to the top. A Fibonacci 50% is 2.8, 2.9-ish%. We came in 2 rate cuts, 50 beeps. So we get another 25, et cetera, et cetera. When does this get difficult? When does the gaming of this get difficult?
For the Fed, I think the first 75 to 100 basis points, likely 100 basis points, is straightforward. Our view is that the neutral rate in nominal terms is 3.5%. So getting down close to 4%, I think, is a straightforward move from their perspective.
So another 25 each meeting, do you think?
25 each meeting. I think the potential, if you get a softer jobs report, they would have to go 50 again, or they may choose to. But at the same time, I think once they get 100 basis points, and if the economy continues to look strong and the labor market stabilizes, it becomes a greater question at that point.
All right, so I think the question here is, Matt, what is the recession risk? You said you were in that camp, presumably feel a little bit better about things here, but is that recession risk still there for investors?
Look, it's always there. You have an unconditional probability of 15 to 20% every year.
Okay.
I don't know that it's all that elevated relative to that. If you look at the economy, there's no imbalances. There's not a lot of leverage. The household balance sheet looks fantastic.
Yep.
We haven't overspent in a lot of areas. Financial conditions are easy. Banking credit conditions are easing. Consumer income
Okay.
looks fine. So I think those fundamentals are strong.
Matt, I don't care. Stay with us. We got to have a conversation here in a moment. Red and green on the screen. A VIX 16.90 with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, and John. Republican J.D. Vance and Democrat Tim Walz face off tonight in the CBS News vice presidential debate. With widening Middle East war, a hurricane, and a dock worker strike all in the foreground. Bloomberg's David Gura has a preview.
It's going to be an interesting moment, to say the least, to see both of these men next to each other on that stage in a debate that's kind of modeled after what we saw in the 1960s with Kennedy and Nixon. They won't be sitting at a table, which has been customary for these vice presidential debates. They'll be at podiums. But you bring up the hurricane damage, which is so extensive and so devastating. What we've seen in the Middle East. I think these are sure to be questions from Margaret Brennan when she conducts that debate tonight.
Bloomberg's David Gura, and you can catch the debate simulcast on a special edition of Bloomberg's Balance of Power. It starts tonight at 8 p.m. Wall Street time on Bloomberg Radio and television. To put in perspective the devastation caused by Hurricane Helene, more than 40 trillion gallons of rain drenched the southeast U.S. in the last week. That's enough to fill the Dallas Cowboys Stadium 51,000 times, or Lake Tahoe just once. More than 130 people are reported dead, and about 600 people are unaccounted for. President Biden asked for patience about FEMA's response to the disaster.
It's not going to be one hit and it's over. It's going to take a hell of a long time. It's going to cost a hell of a lot of money. But this is the United States of America, and we've got to do it.
President Biden says he plans to survey the region, including hard-hit North Carolina, tomorrow. Finally, Tom Brady's latest record-setting attempt will take place off the field and inside an auction house on December 10th. The 7-time Super Bowl winning quarterback and current Fox Sports broadcaster will sell 47 pieces from his collection of watches and sports memorabilia at Sotheby's, New York. The pieces will be sold in a standalone evening sale the auction house has named The GOAT, Watches and Treasures from Tom Brady. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. Getting torn to shreds out on YouTube live chat. I haven't done the Mets yet here in the baseball wonderment. Best of the season. Michael Barr with us, and joining us now, our chief Mets correspondent, Matthew Lazzetti, joining us. Cut to the chase. They lost on purpose yesterday, the second game, so they get to play the dreaded Milwaukee Brewers.
I don't know. I mean, the last series against the Brewers looked good against the Mets. I think it made sense to save some of the players that they had in the second game. But that first game, to be down 3-0, to be down 7-6, for Lindor to homer in the ninth like that, for Diaz to bounce back was really amazing.
Buster Olney called it the game of the year.
Yeah.
No question about it. And Michael Barr, to you, I mean, what was great about it, and I can't watch the Mets because I'm scarred from 1986, but, the basic idea here is Linder, what a class act.
Oh,
when he
yeah.
hit that home run.
And I tell you, it's my grandmother, God rest her soul, she had a saying for this, Lord, child, mine, because that was what that game was all about. It just knocked you for a loop. A very exciting game. My goodness.
It was great. Matt Lazzetti, what do you think here with the Mets? I mean, do they have any kind of integrity and continuity to take on the dreaded Dodgers?
Look, they have momentum. I think they're the best team in baseball since late May. So they've been they've been incredible for a long period of time here. The starting rotation is going to be critical. Severino going tonight, I think this afternoon will be good. And the lineup is hot, so I'm optimistic.
Compliance at Deutsche Bank is going, what in God's name is he talking about?
No,
Matt Lazzetti.
He's bailing out early
so
today to watch the
Michael
Mets.
Barr, did you see how young Lazzetti there just said they were the best team in baseball since whenever?
Well, he's handsome. He can always say.
It's okay.
5:30 first pitch. Okay.
5:30 after the Tigers
So
beat the
Luzetti's out
Stros.
sharply at 5 o'clock.
She's
to the News
gone.
Club.
I
Right.
mean, he's in that steakhouse up on the second floor.
Yep.
From New York City, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Stocks beginning the fourth quarter on a winning streak. S&P 500 has gained for 4 consecutive quarters, the longest such winning streak since 2021. The S&P 500 adding $2.5 trillion in the third quarter. It closed at a record yesterday. Dow also closing at a record. Among some of the individual movers, Boeing considering raising at least $10 billion by selling new stock. They're trying to replenish the cash reserves depleted by the ongoing strength there. And shares of Apple among the most actively traded pre-market, down right now 1.2%. Analysts and investors continue to track early reads on demand for the company's latest iPhone. And CVS Health gaining, the company conducting a strategic review of options, including a possible breakup. That is according to our sources. And record borrowing, more than 1,200 debt issuers selling over $600 billion in September. That's according to data compiled by Bloomberg, the most for that month in records going back more than 2 decades. Dow futures down 127 points. S&P futures 5 points lower. The NASDAQ futures right now up 3 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul, Tom.
John Tucker, thanks so much. Bloomberg surveillance this morning brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost. Global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Do that at ibkr.com/RIA. We thank Interactive Brokers foundational support. This should be a 3-hour conversation, and it can with David Salem. He's with Hedgeye, which barely describes his contribution to thinking about the business. I don't want to waste time with the resume, but it's extraordinary, including work at Harvard. When you were at Harvard, and I don't know if it was law before MBA or MBA for law, did someone try to talk you out of this madness of getting law and MBA at Harvard? Is there somebody that sat in the little hot dog stand Tasties and said, David, don't do it?
Great question. Yeah, that's indeed the case. It was quite a contrarian thing to do.
Yes.
When I was in graduate school, I did both the law degree and the business degree. There are programs like that at other universities, too.
Yeah, but back when you did it, I mean, there's some age in the room here now. It was unheard of.
Not many people wanted to go into finance, Tom, because in the rearview mirror you saw at least 15 years of sort of carnage, if you will.
Yeah.
Rising discount rates in the global economies generally, a massive headwind against financial assets. So everybody in my cohort, not everyone, that's an overgeneralization. There were a few of us who had a contrarian streak, but most people at the time wanted to go either into management consulting, that meant Bain, BCG, McKinsey, Booz Allen, or they wanted to go into real estate. Because hard assets, and we can talk about this in the next few minutes, hard assets were the place to be. So they wanted to go to work for Gerald Hines or Trammell Crow.
Right. I've got to go to your fabulous speech, and you go to one of my third rails. Don't equate marketability with liquidity. Don't mistake marketing schemes for asset classes.
Yeah.
I would suggest that the retirement plans of America have gone down in flames over marketing schemes.
Yeah.
Identify an investment marketing scheme that's a path to failure.
Well, I think the clear example, the poster child for this was BRICS, right? Where you took a highly heterogeneous group of assets and put them in the same risk bucket and said, we can now logically decide using quantitative methods how much of a permanent pool of capital, big pension fund, an endowment foundation, even a family office should be allocated to that risk bucket, when the risk bucket itself was internally inconsistent and made no sense whatsoever. And that still plagues the industry for reasons we can talk about if you'd like.
David, we had a big take story on the Bloomberg terminal yesterday that looked at the endowment returns of the Ivy League and over the last 20 years. And Harvard actually came in 7th out of the 8 Ivy League schools.
Yes, tell me about it.
And it highlighted the Yale model. Tell us what your understanding of the Yale model is, and is that a good model?
Yeah. Let me just cut right to the chase. It's a really sound model, but it's been vastly overused and overfunded. Now let's just back up. So Swenson, I met David on the first, may he rest in peace, who was a great guy and a real mentor to me. I met him on his first week on the job, May of 1985. He comes in, he's 31 years old. The first thing he said to me in our very first conversation, in the first 10 minutes, over lunch in New Haven, he looked at me and said, I don't know an effing thing about investing. and that's exactly why they hired him, so that he wouldn't bring preconceptions. Because what they were looking at was a diminution in the endowment purchasing power of Yale over the prior 15 years of something like 65%. And New Haven was a wreck. So David said there must be a better way. And he devised, and it took him several years, and I kind of had a front row seat for it, and then he became a founding member of our board at the Investment Fund for Foundations. So he was sort of technically my boss for more than a decade, along with other people. But he said to himself, look, I can see in the data, he was very data-driven, I can see in the data that equities outperform bonds long-term, so I'm going to have an equity bias. I think we have skill and intellect and an edge here at Yale because of who we are. So I'm going to favor asset classes that have a dispersion of returns, inefficiencies, if you will. That led him, of necessity, not choice, to load up on illiquid assets. Not because he was pursuing illiquidity for its own sake, but he was pursuing talent and dispersion, and that brought him into, and he was a pioneer in hedge funds, private equity, and the like. Final thing is, which is often ill-ignored, is he said, and we need to diversify to a prudent extent. And if I can just finish the story, roll the clock forward to today. What's happened since David devised that Yale model? I call it the Swenson model, not the Yale model or the endowment model, because his successful implementation of it was highly idiosyncratic and required an enormous tolerance for discomfort to be a true pioneer.
Just the time we've got left. You know, Jack Ma ran Harvard, and they basically, as Janet Lauren said in her reporting, it was a brilliant interview yesterday, Paul, with Janet Lauren. Basically, Harvard's tanked after Jack Ma and all that. I don't want to go into that. But we got to get David Salem on the new illiquidity, which is called private equity and private credit. You and I are going back years going, have we seen this act before? Is that how you feel?
I do, Tom, exactly. And so the single sentence response to what you just said is that almost every effort in the history of capitalism to transmute illiquid assets into liquid ones ends in tears. I could stop right there. But so the business model, and it is a business and a revenue model, that private equity, private realty, private infrastructure, and other managers, their household names today, have set atop otherwise truly sound enterprises, is flawed. And it raises a really important question as we seek to democratize access to some of these private forms of investing. Are we actually doing folks a favor? They're clearly much higher cost forms of investing. So I have serious concerns about that. I just alluded to it. The bottom line is people have taken a very sound model that was idiosyncratic and entailed a great degree of discomfort when it was first designed by David Swenson, and they've taken it way too far. And Wall Street, you know this, Wall Street tends to do that with just about everything in accounting.
Don't be a stranger. Paul and I would love to get you back for an extended half-hour conversation. This has been blindingly too short today. David Salem, folks, I really can't say enough, particularly the Philadelphia focus on his charities and foundation over the years. Some talk, others do, and David Salem at Hedgeye is someone who is done. Did you play hockey at Harvard? Were you?
No, I didn't. And Tom, or in sports, let me just say, I'll recommend my own therapist to get over what happened in '86. I think I've successfully overcome that. I was born and raised in Fenway Park.
In Game 3, Lenny Dykstra hit that ball. In this room, right where we're sitting, folks, I sat with Lenny Dykstra, and we agreed his home run off Oil Can Boyd has never hit ground.
I have a good therapist for that. Now I'm going through therapy for the second Mookie. Right, because we lost the great Mookie to the Dodgers. So you and I, we should go and have cocktails.
Well, drink early, drink often with the Red Sox. What a successful season, David Salem. Thanks. So I mean, Paul, this is the raging debate forward on private equity and private credit.
Well, I mean, you think about 2023, what a tough market. 2022, what a tough market that was. I don't recall these endowments marking down their privates as much as I think they should have. So to me, it's all about, one of the issues about that is mark to market. And boy, the endowments they've got 30 to 40% of their endowments in alternatives, Tom. It's not 10. It's significantly higher than that.
Doing Dock of the Bay. Danny Berger's out at the Dock of the Bay at Port Elizabeth here with this strike on. We did Otis in the last hour. Al Giroux, good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Lisa Mateo. Out. John Tucker in for Lisa Mateo. Michael Barr can't focus. 4 hours away from Tiger Strohs, so he's getting it done today.
Yeah,
it's about.
He's bringing it. Appreciate it.
Beginning of the fourth quarter.
Yes, already.
I am
Summer's over.
humbled by sell in May and go away. In 14 articles, August 31st, saying, "Oh, woe is me." Shakespearean gloom on September.
Yeah, and actually, I mean, here we go. And we're starting off October 1st here. A little bit of mixture here. But, boy, the S&P 500 up 20% year-to-date. The S&P equal-weighted up about 14%. So a little bit of an improvement in the equal-weighted index over the last quarter.
Program note, we always take guests in. We were like thumb up, thumb down. You were like everybody else in the media and that. Thank you for the comments on David Salem, just with us with Hedgeye.
Yeah, it's the first time
and some really heated comments on YouTube. Why was that so short? We agree, and sometimes we don't agree, but we agree, and we'll be sure to get David Salem in again for an extended 2 blocks. That was good. It's like Mobison last week and Nassim Taleb.
Yep.
You were here. It was magical.
I know. I saw that on the schedule. It looked solid.
Solid. It was very, very good. Thank you
I was in a pub somewhere.
to Giuseppe's father for making that happen. We're going to go to Danny Berger. Let's get the markets open first. Red and green in the screen. The VIX 16.82. Right to it from our interactive broker studios, the Bloomberg Business Flash. John Tucker.
All right, record closes for the S&P 500 and the Dow Jones Industrial Average yesterday. And as we start the new quarter, a couple of data points for investors to latch onto today. JOLTS, job opening labor turnover survey, that's out at 10 Wall Street time. Along with that, we're going to get the ISM Manufacturing Index. The big one, of course, later this week with the jobs report Friday. Looking right now in the pre-market, among the most actively traded Apple shares down over 1%. Analysts and investors continue to track early reads on demand for the latest iPhone, which many are hoping will re-accelerate revenue growth. Paul, of course, doing his part. Very nice. You had to get black kind of boring.
Yes.
Boeing down 1.2%, considering raising at least $10 billion by selling new stock. The plane maker seeking to replenish cash reserves depleted further by the ongoing machinist strike. S&P futures 3 points lower. The Dow futures right now down 121 points. NASDAQ futures, they are up just about 14 points. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Years ago, I did a book, and it was sort of thrown at me and just said, shut up and do it. And I was like, yeah. It was called The Box. Mark Levinson, Princeton University Press. And I was transfixed, Paul, by what you and John Tucker lived in New Jersey, which is the invention of the container thing that we see floating around. On April 26, 1956, a crane lifted 58 aluminum truck bodies aboard an aging tanker ship moored in Newark. 5 days later, the IDLX sailed into Houston, and it started in Newark.
Yep, absolutely. And it's some of that railroad traffic. You know, we can take the containers off and on railroads and put them onto ships. It's just been extraordinary for
and trucks, not to mention
trucks,
intermodal transportation.
It's been revolutionary for the railroad industry.
I can't say enough about Mark Levinson's book, The Box. Really, really outstanding. Out at Newark in Elizabeth, Danny Berger joins us right now on this strike. Danny, can you guess how many days this is going to be?
I personally can't guess. I can give you an educated guess by those smarter than me, Tom. According to channel checks that Bloomberg Intelligence has done, it looks like this will last from a few days to a week. It looks less likely at this moment that it will be weeks and months. And that is what this economy needs. This economy can withstand a few days. It can maybe withstand a week. And that's because in advance of this, there had been multiple shipments, record numbers of shipments coming into the U.S. because we knew about this date. We knew that October 1st, the current contract with the international longshoremen would run out and we would have this situation. So we are prepared for a couple of days. Now, when it goes to weeks, when it goes longer at that, there is just too much at stake. There's too much at pressure, just from both a monetary point of view and from political pressure. That means it's unlikely to last that long, but it very well could.
Danny, I know one of the issues that you've reported on before between the two sides is automation. What are some of the details about that automation risk that the workers see?
So specifically, the workers want a ban on any further automation. So that means things that automate loading and unloading onto these cargo ships and onto trucks and elsewhere. Now, the thing is that the East Coast and Gulf Coast ports, they are behind when it comes to automation. When you look at ports in Asia, Amsterdam, for example, they are already largely automated. And this is the exact argument that the USMX, the United States Marine Association, that represents the employers, has been arguing, that they are falling behind and technological change is inevitable. The difference, though, in Amsterdam is you still have workers there, even though there is automation. They're just not literally on the ports. They're somewhere further away. They're remote controlling the things. So in order for that to happen here, there would need to be significant upskilling, and it's those sorts of guarantees that the dock workers here really want.
Danny, Mark Levinson's The Box, How the Shipping Container Made the World Small. Quote, the colorful chaos of the old-time pier is nowhere in evidence at the major container terminal. The brawny longshoremen carrying bags of coffee on their shoulders nowhere to be seen. It's not Marlon Brando on the waterfront. He would not be at home. What is it, Danny? Is it dangerous work?
It's partially that. It is dangerous work still to load and offload. It's less dangerous than it used to be before the container ship, before these men and women working on these docks had to basically figure out how the meat goes next to the car and position things and worry about getting crushed. It is still a really dangerous job here, Tom, and that's part of the reason that they are asking for more money. And I really think the invention of the container cargo is such a perfect analogy to today, because at that time when it was heralded, look at this new era of us being able to offload the cargo directly onto a ship. The same union that is striking today, the International Longshoremen, looked on in horror. There are newspaper quotes from that time where they said that they were worried about their jobs. So it is another change that is happening today. You could argue that the pace of innovation, it is unstoppable. And so, yes, they might want it written into the contract to stop that innovation, but there is another bargaining chip, and that is, again, to give them some sort of protection and some sort of upskilling to make sure that they can still work in this environment, maybe not in the same way that they are, but that jobs aren't lost.
Danny Berger, thank you so much. From the Port of Newark, the Port of Elizabeth, here the first day of this strike. We need to get to Brent Schutte right now with Northwestern and a reallocation. Brent, what do you publish on October 1 so we can stagger to 2025?
Yeah, I think we're at a point in the cycle we're going to find out if rate cuts stop the labor market from weakening. And so the Fed certainly cut 50 basis points because they're concerned about the labor market. And it's kind of ironic that soft landing hopes have increased when the labor market is actually weakening more. Typically, the labor market is the last to go, and that's where the risks are right now. And I suppose if you think about that against an economy that's wobbling just a bit, has the port strikes that maybe are out there, plus investors that are highly optimistic in stocks at elevated valuations, we think there's just a bit of caution that is needed from investors in the future.
So, Brent, you guys have been, I think, on the more cautious side of late. We do have a Fed that is cutting rates here. To the extent you still need to be in this market, where do you feel most comfortable, maybe given some of the valuation concerns, given some of the growth concerns?
Well, it's not valuations across the board, and I do think valuations win the time period that I'm concerned about, which is more the intermediate to long term. And so certainly in the short term, they don't matter a whole heck of a lot, although they do create some downside risk if those elevated valuations don't have the economic growth or the earnings growth to support them. But I think from an intermediate to long-term perspective, I'm always struck by the commentary that I used to hear quite a bit, which is asset classes don't die, they just go to sleep for a while. And I think about the economy potentially, even if it goes through a recession, broadening out and rate cuts coming along. Look, the markets started broadening out in July of this year. That is because we had weak CPI reports, and then we had a weak labor market report, and real rates started coming down. One way or the other, I think real rates are going lower, and I think valuation wins in a longer-term time period. And so we do like parts of the market that have been left behind, like small and mid caps, which I think for people with a 3 to 5 year horizon will be happy that they did so, even if we have a recession in the not-too-distant future.
Is cash an asset class at Northwestern Mutual?
It is, but we've been instructing our investors to move further out on the yield curve for some time now. We are actually above duration on the fixed income portfolios that we run because we have been concerned about a recession. We thought rates were moving lower, and that was a trade that we did back a few months ago that has actually, I think, paid off for our investors, as well as I think bonds now provide a hedge against equity downside risk caused by potentially a recession.
How much credit risk do you want to take here, Brent? I mean, again, the 2-year Treasury, 3.63%. It wasn't the 5% that we saw several months ago, but still pretty decent. How much credit risk do you want to take above and beyond that?
So we've moved more towards high quality over the past year or so, just given the risks that we think are out there and the reality that you're not being compensated for those risks. Think about the equity market optimism that I expressed and talked about earlier. I mean, the AAII sentiment survey has been above 50, which is a contrarian indicator on the bullish side. And in last week's conference board, 47.6% of respondents said that stocks were going higher in the future, which if I look historically back into the 80s, it's only been higher twice besides the last couple months. One was in January of 2000. And the other one was in January of 2018. Both of those saw equity weakness thereafter. And so we've been just a little bit more cautious on the risk side of the equation overall. But that is not a comment about long-term investing. That's more of a comment about just making sure you're staying true to where your allocation should be.
What's the measurement of exuberance right now at Northwestern Mutual? What do you see from your clients?
Yeah, I think in general, our clients have a financial plan and they stay true to that plan. But certainly overall, you are seeing equity market exuberance that I just mentioned that I think is out there, and people are optimistic, which, I think over the coming few months, we're going to find out whether or not we actually have that soft landing because the labor market has shown signs of weakening, and we have passed some of the metrics in the past that have led to a recession. And so we'll find out if the Fed's or rate cuts can actually stop that labor market weakening, and we get a big report Friday.
Brent, thank you so much. Too short a visit today. Brent Schutte with us with Northwestern Mutual. We'll extend that next time. I had to go to Danny on the strike. I love what she said about Amsterdam.
Yeah.
It's about, in the the West Coast port discussion a couple years ago. it all devolves down to a fear of technology.
Sure.
I mean, it's all it comes down to.
Yeah, and I mean, and again, you see those container ships and loading and unloading all those containers, and as John Tucker was talking about, the intermodal type of transportation on the backs of trucks and rails. It's made it really efficient to deliver so many types of goods these days. But the efficiency, oftentimes comes at the expense of labor. So they're certainly trying to guard against that.
We'll continue coverage on that again, as Paul mentioned, around the Corpus Christi. And good morning, Savannah, Georgia, there with a huge shipping component as well. I look at this, Paul, and I look at people, I get every guest to guest, everybody's sort of benumbed by September.
Yeah.
That's what I feel.
Yeah, sure.
It's like,
So now we got the last quarter of the year. You've got the S&P 500 up 20% through the first 9 months. What's this next quarter going to do here? We're going to get the jobs data is probably the next economic data point, and then we'll kick right into the third quarter earnings.
So, we cover the Mets. It was painful. I was like, with
good for them. They're
Mr.
playing fall
Salem.
ball.
We cover the Tigers, cover the Brewers. Somebody says there's no Stros talk. We really don't want to cover the Astros, do we?
Well, no.
They're always there.
And Stroh's, let's talk about beer.
Yeah, well, that's good. I like that. Okay. They're playing the Tigers today. We'll have to see what the Astros do. But they got skee-ball going, so it'll be good. This is the best time of year.
It is.
It's great.
Yep, baseball,
It's
football.
baseball 2 out of 3. It's great. Stay with us. Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, the Bloomberg Futures Report, being brought to you by Interactive Brokers. Markets never sleep, neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. Both the S&P 500 and the Dow Jones Industrial Average starting off the new quarter after closing at records yesterday. Among some of the movers this morning, CVS Health. They're conducting a strategic review of options, including a possible breakup. This is according to our sources, as the company faces headwinds from its drugstore chain and Aetna Health insurance arm. Those shares, they were up pre-market about 1.9%. Big question surrounding the dock workers strike. How long? JP Morgan Chase estimates the economic loss from the shutdown will be as much as $4.5 billion a day. And according to Oxford Economics, a backup resulting from just a week-long strike would take about a month to clear. BI's Mike McClone writing this morning, crude's track likely toward $40 a barrel for crude oil, and gold $3,000 an ounce with the bumps in the road along the way. Right now, NYMEX crude down $1.05 a barrel, 67.12. The Dow Jones Industrial Average, Dow Futures down 118 points. S&P E-mini Futures 6 points lower, and the NASDAQ Futures right now 4 points lower. And we check the markets for you right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Paul Sweeney and Tom Keene, thanks for joining us on Radio The Corridor, 99.1 FM, Washington, Bloomberg 11.30, our flagship in New York. Good morning, 92.9 FM. Up in Boston, across the nation, your commute, Apple CarPlay, Android Auto, and on YouTube. Subscribe to Bloomberg Podcast, growing every day. And we got the live chat going. It's been eventful today, to say the least. Sarah House with us now. senior economist at Wells Fargo. We've already got some sharp disagreement on non-farm payrolls. 142 the history, the survey 150 right now. Sarah, we're going to come up light on non-farm payrolls on Friday.
Yeah, we think so. So we're a little bit below consensus, looking for a gain of just 135,000, which would keep that 3-month average right around 120,000, but certainly a step down from the year-to-date average that we've seen so far of around 185,000. And really, this just comes down to a broad array of labor market data continuing to point to demand for new workers declining, even as we continue to see layoffs remain fairly low.
And Sarah, I guess one of the discussions among market participants is about that labor market, because we think the Fed is focusing on that labor market, is are the trends kind of getting us back to a normalized labor market, or are they something more troubling? How do you guys think about the trends we're seeing in the labor market?
Yeah, so when I think about the absolute state of the labor market, I still think it's pretty good. So again, averaging about 116,000 jobs over the past few months. So under kind of a more normal population growth, that's probably enough to break even. If you're looking at the job openings per unemployed, we'll get an update here shortly, but that's still showing that you have one job opening for every unemployed person. We're seeing wage growth outpace inflation. So that's all good. Where I get concerned is the negative momentum that we've seen, the direction of travel, as Powell has highlighted, in that we've really seen a deterioration that is ongoing. And right now, again, the absolute state of things are okay, but to the extent that we still have downward momentum, that's where I start to get nervous that we haven't quite seen things begin to stabilize and start to turn around.
So is that something that the Fed can deal with a modest continuation of rate cuts in terms of their toolbox, or is this something beyond that?
So I think certainly getting rates back to a more neutral stance would help. So you still have relatively high interest rates. That's making it hard for some companies to service their debt. It's keeping demand for big ticket items fairly damp as well. So that's weighing on hiring. So I think lowering the rates will help begin to turn this around. But I think, of course, the question is, will it be fast enough? So there is a lot of momentum within the labor market, and shifts can happen pretty quickly. So it's a delicate position that the Fed's in right now.
Sarah, Wells Fargo has a heritage with acquisitions up and down the coast. And I would also say in the general idea of Hurricane Helene as well. Have you done any preliminary work on what this atrocious damage means for the nation and the region?
Yeah, so it's really devastating to see some of the pictures here in the Southeast, and even just an hour away from where I am in Charlotte, just some of the flooding that we've seen in the Asheville region. And when we think about just some of the commerce, I-40 being washed out, I think that can have some lasting implications in addition to just the human toll, and I think just the devastation that we've seen here. So I think it's still pretty early days to put some numbers around it. But I think it's going to be, you'll see eventually some bounce in GDP as you get things like investment, but that doesn't really, I think, fully account for the toll and the loss of assets that we're seeing, let alone just some of the personal devastation.
Well, a conversation for another day. And, Paul, I looked at Asheville, which is a fabulous center for art and music. It's basically Nashville East.
Yep.
And it's just absolutely heartbreaking.
No, they're not prepared for that type of rain. That's for sure. Sarah, what do you think about the U.S. consumer these days? Again, interest rates are coming down. John Tucker and I are filling up our gas tanks at $2.85 a gallon. That's better. How do you think about the U.S. consumer these days?
Yeah, so U.S. consumer has been hanging in there much better than I think a lot of people expected. And we're starting to see with the revisions last week, I think some of the reasons why. So income growth has been a lot stronger than what was previously reported. And so we don't think the consumer is in quite as perhaps a vulnerable state. But I think when we look at the path of spending going forward, it's increasingly relying on the jobs market. So looping back to the labor market, that is going to be really important for how spending unfolds here. So we're not seeing, such a low savings rate. We've seen stronger income growth, but spending is going to depend on income growth going forward, which we expect to slow given the softer jobs market.
Well, if you get a 130 statistic, are you saying now and forward we're going to see job revisions lower, as Anna Wong of Bloomberg suggests?
Yeah, I think there's still some room for potentially lower revision. So one, will be keeping an eye on the pattern of those net 2-month revisions that have been downward. But also when we think about the birth death factor, so we think that's a big source of the annual preliminary benchmark downward revision that we saw, where we're just not creating as many businesses as we were a couple years ago. So it takes some time for the birth death model to catch up to that. Now it's informed with each new quarter of QCW data, but we would expect to see that birth death factor continue to slow, but probably, probably still adding a little boost here in the near term. So you're going to have to factor that in when you think about what's the genuine underlying run rate.
Yeah, but the run rate, I mean, I got 30 seconds here, which is totally unfair, but is our run rate now with revisions sub 100,000?
I think it's probably somewhere around 100,000, maybe a little bit lower. So we've seen at least business formation stabilize more recently, but again, the birth death model is probably adding about 10 to 15,000 more to that. So you have to account for that.
Brilliant. Sarah House, thank you so much with Wells Fargo. So I think we heard my puny brain. I didn't have enough Sanker Tang here to get me going, but I think we're at 70,000, and then we heard an optimistic 150.
Right.
And now we heard 130.
Yep.
Which tells me everybody's got a dartboard.
Everybody's got a dartboard out there today. The consensus is for 150 on the Bloomberg terminal. So we'll see how that plays out. But certainly labor market in focus for the market and for the Fed.
Mohamed El-Arian, is he? He can't replace Rogers. I mean, with the Jets.
I don't know. No.
Dr. El-Arian writing over in England moments ago, Eurozone inflation drops below 2%. I mean, that's, Mark McCormick alluded to that. I'm sorry. Yep. It's like the disinflation is happening in real time.
Absolutely. So we'll have to pay attention to that. And again, we've got inflation data. We've got the labor data coming up in this week. And then we've got folks trying to calculate the economic impact of the strike, Tom.
Can I go to 4 digits? Last
Sure.
time in October. 10-year yield, this is a real yield, inflation adjusted yield, 1.5536.
Wow.
The fact is, it hasn't broken down to new lows, but it's right there on support. 1.55 handle on the 10-year real yield. Little red on the screen. Futures at -8. The VIX 16.88. Stay with us. Across the nation, worldwide, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the newsroom with this Bloomberg Business Flash, the opening bell report. Ahead of that, futures, they've been slightly lower all morning long. Now, this morning, kicking off the fourth quarter of the year, the Dow and the S&P 500 starting the new trading day after setting record closes in yesterday's trading. Right out of the gate, the Dow Jones Industrial Average, 77 points lower, down about 0.1%. The S&P 500 is down 6 points right now. That is down 0.1%. And the NASDAQ 100 out of the gate right now, 11 points lower. And of course, in the U.S. today, we see data on labor via the JOLTS survey and the broader manufacturing conditions with the ISM. Both figures expected to be largely unchanged from the previous readings. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. That is the opening bell report. Paul and Tom.
Thanks so much, John. Greatly appreciate it. To say the least, shipping is about the Greeks. There's a University of Piraeus where they have maritime studies. And if you're smart, you possibly get in the door to learn on a global basis what Greece does with shipping. Joining us now is Seanergy, and a name that you'll know from their board, John Katsonis, has been with us before on shipping on the Red Sea and all the challenges. But today, the chairman and the Chief Executive Officer, Stamatis Tsantanis, joins us now from Seanergy as well. Sir, I want to speak to what Danny Berger talked about, which is the technology difference of shipping and docks, and she said between Amsterdam and America. Is America behind in the technology of loading and unloading ships?
Well, yes. Good morning, everyone, and nice to be here. Well, I must say that America is generally a little bit behind in infrastructure altogether. So it's not just the loading and unloading of containers, but generally we feel, and we've been doing a lot of raw materials exports from Baltimore, especially. It's kind of a little bit behind. Yes, I would recommend an urgent upgrading on the infrastructure. The sooner the better.
So, Stamatis, give us a sense of how these strikes, they happen very rarely, although we had one in the West Coast a couple of years ago, but here on the East Coast, it's been a long time. How does it impact the consumer, and over what time frame typically?
Well, I cannot think of a worse coincidence, to be honest, because it's not only the strike that is coming up and it's starting, and it's going to cost the U.S. economy anywhere between $4.5 and $7.5 billion per week. It's also the Red Sea disruption. So, you have all the East Coast being affected because, the vast majority of the containers are also affected by the Houthis and the terrorist strikes in the Red Sea. So, having that, which has to divert the ships around the Cape of Good Hope together with the strike, I believe that's kind of a bad combination to happen, But, to be honest, it's like pre-election. So I believe that the people feel that they have leverage to push for certain things, and that's what's happening right now.
Stamatis, if the experts and the pundits say we can shift from East Coast Gulf Coast strike-bound America over to the Pacific Coast, how do you interpret that? Is that doable?
Well, I believe that the railroad system is already kind of full. So I'm not so sure that this can happen effectively because, transporting almost half of your TEU import capacity from one coast to the other and then putting it on a railroad, I don't think that's so feasible. Maybe it is for a short period of time, but I don't think that's a solution that is going to work out in the long run. No way.
So what are you doing with your ships? I'm looking at your map here, and you've got some ships in the Atlantic Ocean, coming or going towards the U.S. What are you telling your fleet these days about the East Coast of the U.S.?
Well, we don't have any upcoming calls in the U.S. right now, and the only ones we have is in Baltimore, which has not been affected. So we are outside of this thing, and we're not being affected so far. And I strongly believe that we will not be affected. So we're good. I mean, Seanergy is good. And, I believe that the exports of coal outside of Baltimore will continue. And that's not going to be, a more detrimental effect to the U.S. economy.
Geopolitics, it's rearing its ugly head here, both in the Baltics and in the Middle East. How does that affect global shipping? And is the global shipping industry kind of adjusted to it?
Well, I'm afraid to say that any bad global effect and any bad geopolitical effect, it's unfortunately good for shipping. Freight rates go up because you have longer trading routes. Vessels need to divert and do longer distances, so the ton-mile effect gets bigger and bigger. So by saying that, the cost for the consumer, because transportation cost also increases, eventually that is paid by the consumer one way or another. And the more it lasts, you have a cascading effect, which unfortunately brings and piles up the whole thing more and more.
Stamatis, when I look at your income statements and the guess forward into this year and next year, it sort of looks like a Mag 7 income statement. You got an EBITDA, we're guessing 60 cents on the dollar. Your net income, maybe it's going to be 25, maybe more cents on the dollar. It's a pretty profitable business. How much is labor at the docks part of the expense of doing business? Do you look at it as a major thing, or is it an afterthought?
Well, I believe that you're understating our future figures quite substantially. I think it's going to be much higher than that. dockworkers, and we're not so dependent in the United States. But if we had to be dependent more on the United States, I would say that, it would have been much better for the business, because the more delays that is causing, the better off it's for the freight rates. And I'm very sorry to say that, but things need to be resolved. You cannot have all the Middle Eastern and Far Eastern ports warning at this kind of amazing capacities, and a spectacular country like the United States to be so far behind in infrastructure. That needs to be, in my opinion, fixed.
What do they need to fix in the United States to catch up, whether it's shipbuilding? The rest of the industry always says this to us, we're behind in our parochial view. What's the number one thing America's got to catch up on?
Well, shipbuilding, I think we're going to be requiring hours and hours to be talking about shipbuilding and where the United States, how the United States compares with the Far Eastern countries. And that's strategic, and that's also military. So that needs a very careful consideration with whatever the administration may be. But port infrastructure and railroads and the ability to be exporting all these precious raw materials that you have from the country and, being beneficial to the economy, that, in my opinion, should be number one priority.
Stamatis, your company, Seanergy Maritime and Maritime United, talk to us about the types of ships that are in your fleet and what types of cargoes do you guys focus on?
Thank you. We are one of the biggest owners of the Capesize dry bulk vessels, and we transport a lot of iron ore and coal. So our ships are pretty much required for the transportation needs of raw materials that are required for infrastructure. So in order to make steel globally, and that is required for everything, from bridges, tunnels, roads, railroads, whatever, you really need the steel. And that's pretty much fundamental, and that's what we do. We transport vast quantities of raw materials, tens of millions of tons a year of iron ore, coal, and bauxite. The last 3 years, we have exported about 2 million tons of coal from Baltimore to the Middle East and India. So we have been quite big in transporting coal outside of Baltimore ourselves.
Sir, thank you so much for joining us today as we look at day one of the strike, including at Baltimore. Stamatis Tsantanis joins us this morning from Seanergy here. It's amazing the global discussion, Paul, as Danny alluded to earlier, versus the American narrowness of Long Beach or, the other geographies as well. Yeah, and, as Danny in her reporting has been kind of telling us, the two issues are, one is wages, and there's a bid-ask spread there, but presumably they can negotiate that difference there, whether it's 50% to 77%. But the other one is automation, Tom, and I'm not sure what kind of language the shippers and the ports can really guarantee workers about automation, because there is this concept, as Stamatis was talking about, the global competitiveness of U.S. ports versus ports around the world. The U.S. ports have to remain competitive from a cost perspective. I mean, it's fascinating to me. We've got a market worse than futures. The market opening off here, SPX a negative 41, the Dow negative 270. I really want to emphasize this is a different look than what we saw with futures. Let me see if I've got it here. Here it is. I had it up. Apple Computer down $6. I don't know if this is linked to it, but Citigroup maintains a buy, but they shift unit sales, Paul, out a little more. They ship. I just upgraded yesterday, Tom. Did you? I did too. iPhone 16 Pro, ready to go. We now go to John Tucker and his flip phone from one of Michael Douglas's movies.
Excuse me, I'm getting a call right now.
His phone works just fine.
AARP wants me to renegotiate my phone contract.
Yeah, there you go.
I got it free. You can only dial out 911, though.
Okay.
Big numbers.
We'll see. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, and John. President Joe Biden is planning to survey the devastation from Hurricane Helene in the mountains of western North Carolina tomorrow. The death toll after the storm left a trail of destruction across the U.S. Southeast has reached at least 133. Bloomberg's Ed Baxter reports Helene's fatal floods show the risks even moving far inland.
Most of the victims of Helene-caused flooding lived hundreds of miles from where it made landfall. It moved up through Georgia and unleashed terrible floods across Appalachia. President Joe Biden.
Not just a catastrophic storm, it's a historic, history-making storm. The entire Southeast
Hurricane specialist John Cangialosi with the U.S. Hurricane Center says Helene was a wind machine as well as rain producer and storm surge producer. Experts are saying this shows how a hotter planet translates for now and into the future of how more people are in harm's way. Ed Baxter, Bloomberg Radio.
The vice presidential debate will take place tonight between J.D. Vance and Tim Walz. The CBS debate will be simulcast on Bloomberg beginning at 8 p.m. Wall Street time. In his first public remarks since his release in June, WikiLeaks founder Julian Assange spoke about the impact of his detention and conviction. Assange spoke to the Legal Affairs and Human Rights Committee of the Parliamentary Assembly of the Council in Europe in Strasbourg, France. Assange describing his decision to plead guilty to what he says was doing his job as a member of the press.
I am not free today because the system worked. I am free today after years of incarceration because I pled guilty to journalism.
His appearance today comes after the Assembly published a report on Assange's detention in a high-security UK prison for 5 years, saying he qualified as a political prisoner. And finally, a shout-out to Charlie Hustle. Banished baseball great Pete Rose has died. Rose was banned after a Major League Baseball investigation determined he had bet on the game. Pete Rose was 83. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, John.
Michael Barr, thank you so much. Ariel Lowe reporting for Bloomberg at this time. The headline is simple. Iran preparing ballistic missile attack against Israel. This, according to you, United States official, according to Paul, a senior White House official.
Yeah, Tom, this is the type of escalation that I think the White House and a lot of players within the region are trying very hard to avoid. But again, you've seen Israel kind of expand its scope of its actions now, including Lebanon, not just the Gaza and the West Bank. So it looks like this escalation trend is going to continue. We'll see if this reporting, we'll get more reporting on this coming up, Tom.
Joining us now from the Lebanon border, Dan Williams, working with Ethan Bronner in Tel Aviv. Dan Williams, if you see a headline that says a ballistic missile attack towards Israel, what is the size of that tonnage? What is the size of that attack if it's one missile?
One missile can have a warhead of up to 500 kilos of explosive. Iran does not have nuclear weaponry at this point. It may have chemical or biological warheads. I think it would be very unlikely to use them against Israel, given Israel's assumed nuclear arsenal and retaliation strength. So therefore, we would assume it would be a high explosive warhead capable potentially of taking out a city block, and the flight time of something like 10 to 12 minutes between Iran and Israel.
Dan, I look at the 700 miles from the western territories of Iran over to something like the West Bank or maybe to Tel Aviv. You know better than we do. May we assume that technology defeats a ballistic missile, the Iron Dome and such?
I think we can go beyond assumption because we had a demonstration of it on April 14th when Iran, for the first time, launched ballistic missiles in addition to drones, in addition to cruise missiles, something in the order of 300 of these projectiles at Israel. And Israel used its air defenses to shoot down the bulk of them with the assistance of Jordan, with the assistance of the United States, France. So what Israel has actually for this sort of threat is a system called Arrow. The latest model is Arrow 3. Arrow 4 is in the works. Arrow 3 can actually intercept a ballistic missile in space. It's not cheap. Each interception costs about $3 million. However, it has been battle tested, and I think the Israelis will be looking to Arrow to prove itself once again, if this indeed proves to be an actual launch from Iran.
Dan, you're on the ground in Jerusalem. Give us a sense of what you perceive to be the reaction for these types of news stories to the average Israeli on the ground. How concerning are they?
Thank you. Yes, today I'm actually coming down from the Lebanese border, so a fair distance from Jerusalem. We were being briefed by the IDF on their entry, a large-scale incursion into the Lebanese territory, when we were told that the Home Front Command, the wing of the Israeli military responsible for securing civilians against attacks and natural disasters, had suddenly issued a nationwide...
We should also point out that Netanyahu has asked the population
I had some audio challenges there, Tom.
Some audio challenges there. Ken, see what we can do to get Dan Williams back. Our global technical director will work on that, which is what you get into the satellite technology to get to the Lebanese border. I think what's so interesting here is, of course, what we see from the United States. Again, the headline here is simple. Iran preparing ballistic missile attack against Israel, the United States says. Joining us now is someone that understands the multi-dimensions of American defense and our projection, the busy time for the Pentagon. Our David Gura joins us here before a debate tonight, but let us focus on this important news from the Middle East. David, is the Pentagon overwhelmed right now on too many fronts?
I don't know if they're overwhelmed on too many fronts, but this has been a difficult dance for them over these last many months. So over the weekend, you had the United States pursuing a lot of diplomacy to prevent Israel from launching this incursion into Lebanon. That's squarely not what they wanted to have happen here, and lo, it did. In the wake of that, we got a statement from Defense Secretary Lloyd Austin that he'd spoken with his counterpart in Israel and talked about what the U.S. might do to help Israel at the border if these attacks remain targeted, as Israel says they have been. So the U.S. is sending more troops to the Middle East to aid in this, and also just to act as a means of prevention if this widens further. So today's news, obviously, while concerning, is something I think was front of mind for folks in the Pentagon who have been watching all of this unfolding, wondering if and when Iran might take steps here to step up and support their proxy groups, including Hezbollah.
And David, it seems somewhat inevitable here. We've had President Netanyahu, who's really been aggressive in his response to those October attacks, of course, but now widening the scope here, going into Lebanon. We've had some limited incursions into southern Lebanon. It seems like this is a leader that really wants to once and for all try to settle as many scores and set a new level in that part of the world. And it's not something he's getting necessarily full support from the U.S., is he?
You know, he is an increasingly isolated figure on the world stage. He was here in New York a couple of days ago to address the UN General Assembly. It was unclear if that speech was actually going to happen. It kept getting postponed as a result of what's been happening in the region. So after the attack, that infamous attack that we saw on pagers and other electronic devices in Lebanon, he remained in Israel, did make it to New York, and gave a kind of characteristically defiant speech. But he has widened the scope of this war dramatically since about a year ago. We're approaching the 1-year anniversary of October 7th, that horrendous attack. And this is now a front that he's really pursuing with great ardor.
David Gura, Mick Criver over at CNN summarizes the mood that I wanted to hear from Dan Williams. We're sorry for that technical loss in Israel that happens when you're out in the middle of nowhere on the Lebanon border. Netanyahu rides wave of euphoria over assassinations as his political fortunes turn around. What reporting, what summation have you seen of the new Netanyahu after the weekend's events?
Well, Hezbollah is a terrorist group as designated by the United States, and even in comments that we've got from Secretary of State Antony Blinken, there has been a recognition of the fact that Hassan Nasrallah was someone that no one had much affection for in the Western world. So Prime Minister Benjamin Netanyahu is getting plaudits for the killing of the leader of Hezbollah, leader for many decades. You're right about his fortunes. I mean, he does not enjoy anything close to unanimous support among Israelis, and there have been a lot of downs and ups over the course of this war. But I think a lot of Israelis who have grown tired with the provocations of Hezbollah over these last many months and years were frankly glad to see Nasrallah done away with. And as this incursion has taken place overnight, see it as a sign of Israel kind of pushing back on a group that's been a real menace to it for many years, of course. And there are people, Dan Williams, I spoke with a little earlier today myself, notes that border is very thin and people live hundreds of feet from each other on either side. So there is ready conflict, if not military or ballistic conflict on a daily basis. There is a tense way of life there on that border, and Israel's goal here, as stated by the government, is to push back Hezbollah so that it's not something that folks who live on that border on the Israeli side have to deal with.
Paul Sweeney and Tom Keene with David Gura here as we look to the news out of the White House, a senior official there speaking of a ballistic missile potentially from Iran to Israel. Oil leaps. There was a quiet tape. It's not anymore. American oil up $1.80, 2.8%, $70 a barrel. Brent crude up $2, $73.65 a barrel. Gold up $32, 1.2%, $26.91 on gold. The Dow off 300 points now, was off 200. Quiet futures have become a market, negative 52 on SPX. NASDAQ down 1.1%. Paul?
David, what has been, I guess, the evolving position of the U.S. government, of this White House right now as it relates to what's happening in the Middle East? It seems like President Biden and the administration not having perhaps as much influence on the Israeli government as they thought they may have had initially.
No, it's been very tricky, and there's been a call from President Biden for a ceasefire now for many months. He made it as recently as yesterday when he was asked about the prospects of this incursion. It is what he wants to see. It's what his administration wants to see. And again, going back to the UN General Assembly, many countries are calling for it. And there has been widespread disagreement about it, back and forth with Israel and the Palestinians over these last many months. But I think that it's suffice to say the U.S. and policymakers in the U.S. are unhappy with how their counsel is being taken by Israel. But going back to Tom's question just about the prosecution of this war, it has expanded beyond one front, beyond Gaza now, and under Prime Minister Netanyahu and his war cabinet, they feel like this is a moment at which they can make a greater impact than just focusing on Gaza itself.
Does this touch in the debate tonight?
I think inevitably it has to be. And you and I have talked a lot, Tom, just about the degree to which foreign policy matters in this election. And we keep seeing things like this percolate, moments when this rises to the fore and people wonder, yes, about what the United States might do in a moment like this, but also how these candidates might handle something like this. So with these two vice presidential nominees in particular, Tim Walz, governor of a state, J.D. Vance, a very junior senator in the U.S. Senate, how might they handle a crisis moment like this? What is their perspective on, or their appetite or readiness for what could be a very intense moment in foreign policy?
What other actors in the region, David, do you think have a voice that either side is paying attention to? Is there somebody there, whether it's Saudi Arabia or someone that can step in here and try to de-escalate?
I think Saudi Arabia is certainly one of them, but at this moment, none jumps out to me. And I was talking with Giovanna Bercecci, our correspondent in Lebanon earlier today as well, and she talked about just the state of Lebanon today. And we think of Hezbollah as this militant group, which of course it is, but over these last few years has developed a large political footprint as well. So the elimination, the killing of the head of that group has opened up a vacuum even more, and she's raising the specter of there being a prospect of a failed state, Lebanon being a failed state. So I think that's something for Israel to consider going forward here, being neighbors to a failed state where there's even less control over an armed group like Hezbollah.
David Gura, thanks so much. Greatly appreciated. Of course, the big take with David Gura. Look for that in production, no doubt, here on a fractious October 1, a Tuesday as well. As David speaks, Paul, now we have oil up 3%. Up $2 and still lifting higher, $70.35 West Texas Intermediate. Brent crude out almost to $74, up $2.17. Gold up $33, getting up near 2,700, 26.92. The Dow negative 200.
Yeah, Tom, this is an escalation that I guess many people were maybe not too surprised about. You expected it, but again, the question is to where does it end? And I think to the extent that Iran enters into this, then that becomes an entirely new level. But again, Benjamin Netanyahu seems pretty aggressive in the policies and the actions in response to that October 7th clash, or incursion. So we'll have to see how this plays out. But again, another escalation that the markets are reacting negatively to.
Ramzi al-Rakabi now out with the Bloomberg story on this. It is a brief note. The U.S. says Iran preparing to attack Israel with ballistic missiles. The U.S. has indications that, and the key word here, imminently launch a ballistic missile attack against Israel. That, according to a senior White House official, the U.S. is actively supporting preparations to defend Israel against a possible attack. The warning comes after Israeli forces moved into southern Lebanon. Troops began what Israel said was a, quote, targeted ground raid shortly before midnight local time. We'll have much more on that. We thank Ramzi al-Rakabi in Washington for that quick summation of news really by the moment. Please stay with Bloomberg News today on this and the many other stories of our fractious geopolitics. We leave you SPX at negative 50 points, 0.3%. Brent crude, $73.64. This is Bloomberg Radio. Good morning.